and weakening of global and domestic macro and currency. Large caps lose around 1.84 lakh crore rupees market cap today, whereas the mid caps shed around 1.66 lakh crore market cap. The small caps lose around 1.06 lakh crore rupees. The top stocks losing significant market share are HDFC Bank, Zomato, TCS and Eicher Motors. The rupee jumps most since November 11, 2022 after strengthening to 87.48 per dollar level yesterday. The rupee weakens 84 paise against US dollar. In the wake of sharp rupee depreciation in recent weeks, it appears the RBI has decided to step in and control the volatility. The central bank tells the market that the rupee will depreciate, but not so quickly. The broader market decline has been acute in the past few trading sessions. 11 out of 150 mid-caps trading at relative strength index below 30. 23 out of 250 small caps trade at RSI below 30. And 5 Nifty 50 stocks are still trading above RSI of 60. In February, Morgan Stanley Capital International announced that 23 additions to the small cap index is expected. The highest inflows is seen in Adani, Wilmar, Afcons, Brainbees, Ola and others. On the other hand, 12 stocks will be removed in the Rejig. The highest outflow is seen in stocks like La Opala, DB Corp, Mahindra Logistics and others. Beauty and apparel online aggregator Nykaa Fashion records revenue growth of 21% on a yearly basis. The company reports net profit of 52% YOY, whereas the beauty segment sees stellar growth and increase of 32% on a yearly basis with a volume growth of 30%. Eicher Motors slows down to enter the slow lane with loss of over 6%. This is after the company reports Q3 earnings. The EBITDA margin did not deliver as per the street estimates. The margins declined due to increased marketing expenses. Other expenses of the company grew by 70 crore rupees. The company refrains from increasing the pricing. Bullet and Classic have seen good momentum over the last couple of months. Truck maker Escorts cracks over 5% in trade on the back of Q3 earnings. Company's consolidated revenue and net profit is up 5.8% on a yearly basis. The revenue from construction and railway equipment has been lower, whereas the tractor division saw volume increase of 4.5% on a yearly basis. Leading cement manufacturer Grasim reports a net loss of 169 crore rupees against a profit of 236 crore rupees as per the exchange filing. Hari Krishna Agarwal took an early retirement from his position as managing director of the company. Hindalco's arm Novelis reports weak Q3. The company reports a YOY increase of 4% in net sales, taking the tally to $4.1 billion, but the total flat roll product shipments stayed the same at 904 kilotons in comparison to 910 kilotons from last year. Lupin has received approval from the United States Food and Drug Administration for its abbreviated new drug application ANDA for ipratropium bromide nasal solution, a nasal spray. This approval allows Lupin to market a generic equivalent of Atrovent nasal spray. The product will be manufactured at Pithampur facility in India. Brokerage firm Nomura believes that Asian economies like India, Thailand and China have to face higher tariffs than other nations. Asian economies have dual tariff situations since they have their own tariffs in addition to the increase pegged by Donald Trump. These nations are likely to negotiate more with Trump. India specifically aims to avoid conflict and is seeking a deal to dodge these tariff hikes. Ashoka Buildcon cracks after the company's Q3 margins decline over 10%. The net profit grows multifold to 654 crore rupees. The uptick in profit can be attributed to lower cost of materials and decline in finance cost. The company sees a deferred tax credit of 406 crore in current quarter versus deferred tax charge of 31 crore. Citi initiates coverage on Swiggy with a buy stance and a target price of 480 rupees. Citi believes that company's gameplay has significantly improved. Swiggy's platform and first mover advantage in quick commerce is a very big positive. The brokerage firm believes that profitability will follow the company in 2026. Isgec Heavy Engineering, a mid-cap player in the engineering and industrial equipment sector, has experienced significant volatility today. The stock has seen a continuous drop over 3 days with a substantial decrease over the past month, indicating a bearish trend and challenges in the current market environment. The company's net profit declined 68% to 20.07 crore due to higher finance depreciation and tax expenses. Morgan Stanley maintains an overweight stance on Oil India, hikes target price to 635 rupees. The stock derates in the last 6 months. A lot of factors seem to be working against the company, including worries regarding rising average selling price. Oil India is the fastest growing hydrocarbon producer globally. Morgan Stanley expects Oil India's profitability to double by 2028. Mtar Technologies cracks despite a stellar performance in Q3. The gross profit declines 50% due to higher cost of materials. Higher orders expected from the company's civil nuclear power in near term. On the order book front, the company expects stronger execution in FY26 on order book with improvement in margins. Travelling by air to and from Delhi airport is set to become costly from April. The cost may vary based on your travel class and the timing of your flight, potentially leaving an even bigger hole in your pocket. A domestic passenger will pay 610 rupees as user development fee when flying out during peak hours and 405 rupees during non-peak hours in fiscal 2026 and fiscal 2027. Similarly, for domestic arrivals, the proposed fee is 140 rupees during non-peak and 210 rupees in peak hours. This has been proposed under the annual tariff plan filed by GMR Group-owned Delhi International Airport, the Airport Economic Regulatory Authority. Earnings of quick commerce workers, dark store workers and delivery partners have inched closer to that of its freshers' salaries. The salary gap has narrowed to 8,500 rupees per month as quick commerce workers' wages grow at a faster rate than those of its freshers, according to data sourced from TeamLease Digital. While an IT fresher makes 4.14 lakh per annum, a delivery partner makes 3.12 lakh per annum, and a dark store worker makes 2.42 lakh per annum. In 2024-25, quick commerce workers, dark store workers' earnings grew by 9.15%, delivery partners' earnings grew by 11.57%, while IT freshers' salaries grew merely by 5.97%, TeamLease Digital data showed. The Securities and Exchange Board of India on Tuesday barred LS Industries Limited, its promoter Profound Finance, and 4 other entities from the securities market for stock price manipulation. The regulator first observed an article written on the website of NDTV Profit on February 3rd this year, flagging how a company with almost negligible revenue had a valuation of 5,500 crore rupees. NDTV Profit also reached out to LS Industries, its promoter and auditor, for a comment on the issue. However, there was no response from the team at the time of publishing the report. The Chief Economic Advisor V. Anant Nageswaran speaks on the current depreciation in the rupee. He says that the depreciation is a direct consequence of dollar strength and that gravity spares nothing. The Protection of Interest in Aircraft Objects Bill 2025 introduced in the Rajya Sabha will allow aircraft lessors to reclaim planes if airlines default on rental payments. Proposed bill could lower costs for airlines and make the aviation sector more secure. The bill aims to adopt protocols of the Cape Town Convention. The legislation follows a ruling in the Go First case, where lessors were prevented from repossessing aircraft. The ruling led to rising costs for airlines and damaged confidence of creditors. Taking stock of the stellar earnings, Nalco's CMD Vijendra Pratap Singh is confident of maintaining the growth trajectory in the quarters ahead. Remember, the company's Q3 profits jump multifold and revenues expand, led by chemical segment. Better sales realization and volumes of alumina aid profits during the quarter. Time to take stock of Apollo Hospitals, which came up with their third quarter earnings. We spoke to Managing Director Sunita Reddy, and she says that they will continue to focus on higher growth in specialties. The hospital aims to drive higher occupancies as patient volumes increase. It's day 2 at Aero India 2025. NDTV Profit speaks to a slew of defense companies about their innovations. Cyient DLM CTO Kaushal Jadia says aerospace now needs multi-sensor data fusion. We also spoke with Datamatic Tech CEO and MD Udayant Malhotra. The aeronautic products manufacturer calls for India's globalization in aircraft parts. Adani Defence and Aerospace, in partnership with DRDO, launches its vehicle-mounted counter-drone system at Aero India 2025 today. This is India's first such system developed under a public-private partnership model. It will enhance protection against asymmetric drone threats. US President Donald Trump's additional 25% tariff announcement on all steel and aluminum imports has sparked fears of dumping and further weakening of prices for Indian producers. The Indian Steel Association, a lobby of India's major steel producers, has said it is deeply concerned over the decision and urged the government to push for removal of long-standing anti-dumping and countervailing duties and secure exemptions from restrictive measures. Shriram Properties signs a joint development agreement to develop a prime land in Chennai. It offers strategic advantages and economic vibrancy. The aggregate saleable area of 3.2 lakh square feet and to be developed over the next 3 years. IRB Infra's gross toll collection rises 20% to 560 crore rupees versus 467 crore rupees earlier. The company expects the momentum to continue in light of the recent budget allocations. SPFC Finance receives investment worth 400 crore rupees from British International Investment. This deal aims to support low-income and women entrepreneurs in India. This comes after the company announced the allotment of non-convertible debentures on the 4th of February. PM Narendra Modi at the India Energy Week highlights 5 pillars of India's energy, namely resources, brilliant minds, economic strength, strategic geography, and commitment to sustainability. He says that the next 5 years are crucial for this space and announced that Indian Railways will become net zero by 2030. India's first vertical sea bridge, the new Pamban Bridge, is all set for inauguration, resuming rail services to Rameshwaram by March 2025. The 2.1-kilometer long bridge is built at a cost of 535 crore rupees and is situated right next to the 104-year-old bridge, which has a speed limit of only 10 km per hour as opposed to 50 to 75 km per hour speed on the new bridge. After the incident of a horrible stampede at the Mahakumbh that killed at least 30 pilgrims, Prayagraj authorities have issued new restrictions for the next big day. Crores of devotees are expected to take a dip on Maghi Purnima. The fair area has been declared a no-vehicle zone to reduce crowding, with different parking zones designated for different vehicles. Prime Minister Narendra Modi arrives in France for a 3-day visit, during which he will co-chair an AI Action Summit along with French President Emmanuel Macron. Later in the evening, he will attend a dinner hosted by the President, which will likely be attended by CEOs from the tech domain space. Now, beers in Telangana get expensive by 15% as the beer industry body welcomes price hike and urges state government to resolve pending dues. They say that the government should allow companies to set prices freely, just like Maharashtra and Karnataka, as market-driven pricing benefits everyone. Note that payments for supplies made between February and August 2024 are still pending. Donald Trump pauses Foreign Corrupt Practices Act that criminalizes U.S. businesses bribing foreign officials, and this is the same act under which billionaire Gautam Adani was charged and refuted the bribery allegations as baseless. Now, with the pause on the act, FCPA suspension could impact the outcome on the Adani case. Trump says the act sounds good on paper, but in practicality, it's a disaster. In a significant development, 6 U.S. congressmen wrote to new Attorney General Pam Bondi and demanded a probe into the previous Department of Justice's indictment of Adani Group officials. They say the indictment against the Adani Group jeopardized their relationship with close allies like India, calling some decisions taken by the administration unwise. After America goes hard on illegal immigrants, UK pursues immigration crackdown in Donald Trump's style. UK's Labour Department has initiated mass raids on illegal outsiders working in the country. The government, in fact, has also released a video showing the deportation of migrants for the first time, as it marks the removal of nearly 19,000 foreign criminals and illegal migrants since Labour took office. Another executive order signed by Trump grabs attention, and this one is on the use of plastics. Unlike the general direction, Donald Trump bans the use of paper straws, saying they don't work, and instead returns to plastic alternatives. In his words, use of paper straws is a ridiculous situation. This decision effectively scraps Joe Biden's initiative to stop using single-use plastics from federal food services by 2027 and from all operations by 2035. On the global front, President Trump has given an ultimatum to Hamas, warning them to release hostages by Saturday or let hell break out, signaling that if they do not do so, he will allow Israel to cancel the ongoing ceasefire. Trouble mounts for YouTuber and podcaster Ranveer Allahbadia over his remarks on India's Got Latent. While the 31-year-old has apologized for his crass comments, the row surrounding his remarks is snowballing into a major crisis as it reaches the parliament for further discussion. Well, that's all the time we had on this edition of Market Express, but do stay tuned to NDTV Profit for more news and updates.
Entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hand.
So the hospital did quite well. We registered a revenue of 2,785 crores and an EBITDA of 671 crores, which is a 14% growth, and profit improved by 21% to 348 crores. So the numbers were strong. In terms of occupancy, we were at occupancy of 68%. This was led by both ARPOB and by volume. ARPOB grew by 8%. And to 60,055 rupees, and as well as volume grew by 5%. So this gave you a growth of 13%.
Now, what is the expectations when it comes to ARPOB, that is average revenue per occupied bed, and occupancy? Because I know that the Q2 is actually the best quarter when it comes to hospital business. You had an occupancy of around 70% last quarter, while it's 68% in the current quarter. What is the expectations going forward?
Oh, I think this is an exceptional quarter because of the holidays that happen. In this quarter, you have Deepavali and you have Christmas. So because of those two festival seasons, occupancy normally declines in the third quarter, but it's already started picking up in quarter 4.
Also, ma'am, let's talk about your segmental wise performance. So, talking about Apollo 24/7, in H1 you did around 1,500 crores of business. In Q3, that is the current quarter, the GMV was around 750 odd crore. I remember last time you had said that you want to take this number to 4,000 crores. So, are you on track?
So GMV is on at 760 crores. 11% growth, so it will continue to grow. But the most important thing to remember is that revenue for healthcare was at 2,352 crores. So a growth of 15% on the whole, including pharmacies and digital. And it turned profitable with 32 crores of profit. So we're on track for profitable growth.
Got it. So this 4,000 crores of revenue you will achieve by when?
Well, I would say 26.
Now about margins, ma'am, for Apollo Healthco, the margins were at 2.4%. Now, where do you want to see this margin going forward?
The margin should be around 7%. And this will happen not just now, but over a period of 3 years.
Got it. Now, when it comes to Apollo Health and Lifestyle, this quarter you saw a loss of around 8 crore. When are you expecting this segment of yours to be profitable? And EBITDA margins, if I were to see, was at around 9%. So, two questions. When are you expecting this segment to turn profitable? And can you see a bump up in margin? Because in Q2, EBITDA was around 10%. So, quarter on quarter, EBITDA margin has gone down.
Well, I think the margin you can expect to see 15%. The reason it seemed muted was, because the season was not good. And second, they have got a lot of referral business in this quarter and therefore lower margin. But the revenue was strong at 121 crores. And now with the specialty testing menu, you will see greater margins and also higher revenue. So they have launched a global reference lab. They will next week. And they will become a reference lab for rare diseases, genomics, and everything related to oncology.
Ma'am, so everyone is actually talking about, rather everyone is banking on hospital with brownfield expansions over greenfield. Tell us about your expansion plans. I read that you are on track to add 3,500 capacity beds over the next 5 years. Just wanted to know your expansion plans when it comes to greenfield versus brownfield.
So in terms of, we have to do a combination of both, because as you enter new markets, sometimes you have to do greenfield. But if you look what we are currently doing, expansion in Kolkata is brownfield, existing hospital being modified to suit Apollo and NABH standards.
Another day, another bloodbath for the markets as the mid-caps and small caps go into free fall. All indices in the red. Realty and media stocks dragged down. The rupee recorded its largest surge in more than 2 years. The 84 paise spike is the currency's biggest jump since November 2022. Traders say the Reserve Bank of India stepped in to support the rupee. President Donald Trump halts prosecution under the Foreign Corrupt Practices Act of 1977. He says he wants to reduce enforcement on US companies. Six US congressmen write to the new Attorney General Pam Bondi demanding an investigation into the Department of Justice under Biden. Citing the Adani case, they write that DOJ under Biden had endangered the important equation between the US and India. It's an NDTV impact story now. SEBI exposes LS Industries 5,500 crore valuation as stock scam. This is after NDTV Profit flagged how the company with almost negligible revenue had a valuation this huge. Prime Minister Narendra Modi visits France to co-chair the AI Action Summit with President Emmanuel Macron. His 3-day visit is expected to hold bilateral talks with and address business leaders. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Himakshi Bahuguna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. So viewers, benchmark BSE Sensex was down 1.32% while Nifty declined on back of Trump's tariffs. All sectors were seen in red with media, auto, PSU banks down almost 3%, dragging the markets lower. Harsh joins in with more details.
Second consecutive difficult day of trade that we've seen today. 1% shaved off the Nifty as well as the Sensex. 3% plus shaved off the Nifty mid-cap and the small-cap indices. So the pain in the broader market extremely real. We're now seeing 15 to 17% lower on the mid-cap and small-cap index. $11 billion worth of FI selling, really pressuring markets at this point. And essentially that's the theme that's playing out, because across the board there is selling. The breadth is extremely weak for a second consecutive day. Now it will be really important to understand how tomorrow plays out, but for the moment let's break down today. Now earnings of course in focus. Grasim did well on the back of that, and just about staying in the green is doing well in a market like this when the breadth is extremely bad. What didn't do well, some of the auto counters didn't do well, and Escorts and Eicher on the back again of numbers. Adani Enterprises was the top Nifty gainer, largely on the back of the fact that you had some bit of relief from the United States, likely impacting that counter. But outside of that, the breadth extremely weak. Less than 200 gainers to the 2,000 plus losers that we saw on the National Stock Exchange today. So the breadth extremely difficult, and lots of stocks falling 3, 4, 5, 6, 7 and some even 8 and 9% lower on the back of pretty much no news. It's just the relentless selling that we've seen which is pressuring markets at this point. Let's talk about the sectors as well. Realty, second consecutive day where it's fallen 3% plus. The Nifty Bank outperforming the Nifty 50. I don't know how much that counts, but 1% lower versus the 1.3, 1.4% that the Nifty corrected today. And therefore, that bit of positivity. Outside of that, all sectors painted red. The VIX spiking by 3.5%. So all of that is what the market looked like. Last off, some names which were really flying around in trade. And some real buzzers, more on the downside than on the upside, very few on the upside. And that's the list of BSE 500 top gainers, top losers in front of you. Really not reading too much into them, because that was just the way in which the day played out.
Right, Harsh. Thanks for that market check. Now, a significant portion of investments should be allocated to large cap funds to ensure consistent returns over time. This is what Sridhar Sivaram of Enam Holdings had to say, being bullish on large caps. He also said that 2025 could be a challenging year as markets may not yield positive returns. Listen in from his conversation earlier today with NDTV Profit.
If somebody asks me, I say you put it in a large cap mutual fund.
Yeah.
A large part of your flow should be in large caps. You can put a small percentage in small and mid cap, because that's how returns will be over a long period of time. I think large cap looks reasonably good, and they should, over a period, they should mimic the returns that they've given over the last 5 years, 10 years. It's very difficult to predict 6 months, 1 year. We haven't had a negative year for what, 7 years now or 6 years? It's not a norm that every year you will get positive returns in the market. This is an exception. So it's easily possible that 25 is a negative year. I don't know, but I'm just saying that it's possible that 25 is a negative year. So be it. Over a period, this will happen. It is not a norm that every year markets have to give positive returns. That's not how it is.
The rupee jumps more since November 11, 2022 after strengthening to 87.48% dollar level yesterday. The rupee weakens 84 paise against US dollar. In the wake of sharp rupee depreciation in recent weeks, it appears that the RBI has decided to step in and take control of the volatility. My colleague Vishwanath Nair joins in now with more details.
So Tuesday saw the rupee recover sharply from its low levels of about 87.95 reported on the 10th of February to then end at about 86.83 against the dollar. If you were to take away the sudden appreciation on Tuesday, then the rupee weakness would have been about 2.7% since January 1. That would have made rupee the worst performing currency amongst the Asia Pac ex-yuan and ex-yen. Now, it is interesting to note that after accounting for yesterday's sudden appreciation, the rupee weakness against the dollar stands at about 1.36%. That's a significantly better position for the rupee than what it used to be. Now, what traders are telling us is that because of the rapid depreciation of the rupee over the last couple of months, a lot of speculative positions were being built against the rupee. A lot of speculators believing that the rupee would hit 90 against the dollar very, very soon. The RBI in its intervention has communicated to the market that while rupee will depreciate, it will do so only in a slow and steady manner, and that the RBI will not tolerate any rapid depreciation of the rupee or any speculative pressure against the rupee. So that's what this sudden intervention and the sudden improvement in the rupee on Tuesday meant. Now, if you were to compare the rupee against some of the other large Asian currencies, the Taiwanese dollar has actually done better than the rupee, about 0.12% lower compared to the dollar. Thai baht has actually appreciated about 0.87%. The South Korean won again appreciated by about 1.8%. Indonesian rupiah down about 1.53. That's the only currency that has performed worse than the rupee, accounting for Tuesday's sudden improvement. Malaysian ringgit, of course, also appreciated about 0.5%. These are numbers, of course, year to date. So that is since January 1, how these individual currencies have performed against the dollar. And clearly the rupee currently is the second worst performing currency amongst all the other Asian currencies in the market.
Thanks, Vishy, for taking us through those details there. Now, in the short term, the rupee may gain, but in the long term, it's the inflation differential that matters. This is what CA Nageswaran had to say at the IVCA Conclave 2025 on the rupee depreciation. Listen in.
The rupee's annual depreciation was about 3%. And that is partly because, not partly, largely because India's inflation rate differential to the US was about 3%. So in the long run, and I was a teacher, before coming onto this job, I was a teacher also, and I used to tell my students, if you have to forecast exchange rates for about 3 years, the best thing to do is to open your wallet, pick up a coin, toss, and decide if head comes, currency depreciates, and if tail comes, currency appreciates, and you will be as successful as any forecaster. So when it comes to short horizons, up to 3 years, it is anybody's game. But in the long run, which is 5 years or beyond, it is ultimately boils down to inflation differential. So in that sense, as long as our inflation rate is 1% or 2% above the average inflation rates of developed countries or the US, to that extent the currency will depreciate. But the point is, this currency depreciation hasn't prevented India from delivering returns to investors, whether it is direct investors or portfolio investors, or even PE VC investors. In the last 2 years, we have had tremendous exits, quite profitable ones, that attest to the strength of the depth of the capital market, options available for investors, and therefore the rupee depreciation is something that one can factor into investment decisions.
President Donald Trump has signed an executive order rolling back enforcement of a Foreign Corrupt Practices Act, or the FCPA. The act bars a company or person with US links to pay money or offer gifts to foreign officials as a way to win business overseas. Trump weighed trying to scrap the law during his first term. The fact sheet mentioned that US companies are harmed by FCPA over enforcement because they are prohibited from engaging in practices common among international competitors, creating an uneven playing field. In fact, we also spoke to a senior advocate of the Supreme Court, Gopal Jain, and market veteran Sunil Subramaniam on how the removal of FCPA is an important step before PM Modi's visit and how it will help American businesses. Listen in.
It's like a big package. Everything will get weaved in. And I think the key focus obviously seems to be to give a fillip to American businesses and remove this overhang which has been there. So it's sent a positive sentiment. And I think in line with the new ethos and thinking, the revised guidelines will reflect that. So I think it will be a significant change from the existing framework and structure to the proposed new framework, structure, or guidelines that they will come up with. And I think, like we say in India, perhaps this is another facet of ease of business is what they have. And it will probably generate a lot more business in America. And two, the timing of the meeting of the two leaders is important. It'll give them a chance to discuss a lot more without some of the thorny or tricky or prickly issues bothering them. So I think it also, in that sense, paves the way for much more constructive dialogue on the way forward for the two countries.
I would say that this clearly indicates that for Trump, more than being the president of the United States, he is acting like the chief business officer of the United States, right? So obviously in every decision, even if you look at it from the Trump tariff perspective, he's used the tariff to extract concessions for American businesses, to make America great again, American businesses great again. So this is another step there. And I think what this augurs well, see, the US through this act was trying to behave like a moral god, that anywhere in the world a US company does anything corrupt, then they will be hauled up in the US. So I think obviously when they're competing with Japanese companies, Korean companies, European companies in the emerging market space, there are practices like this which are very often done. So I think that this gives a level playing field to American businesses. And I think the timing of it before Mr. Modi goes there is critical because, obviously he's seeking to promote American businesses in India. And locally, there are adjustments to be made. Now, obviously, this clears the path for more American businesses to operate in international economies and including in India. So I think the relevance in terms of timing is also very important. Then second, that it's also very clear that Trump is not going around doing soft power, right? He's not pussyfooting around it. He's there, he says, I will suspend this law. He's willing to use his executive powers to do that. So it clearly shows that he's a man of action. Now, some may like it, some may not like it. But at least you get the clarity that he's very firm on what he believes, he will go and practice. So in that sense, he's a WYSIWYG. What you see is what you get. So to that extent, for the markets, right, this has been a big boost because every American company operating in India, they would always be thinking, no, somewhere some of their partners, right, they engage with subcontractors. Some subcontractor pays a bribe somewhere, that company will be hauled. Was an overhang which was probably a deterrent to American businesses going and competing in international spaces, including in India, and this will free up that. And
Now, in another significant development, 6 US congressmen on Monday wrote to a new Attorney General, Pam Bondi, and demanded a probe into the previous Department of Justice's indictment of Adani Group officials. We have Hiral on standby to offer more perspective on this. Take it away, Hiral.
A strongly worded letter to Attorney General Pam Bondi, the 6 US lawmakers, that's Lance Goodin, Pat Fallon, Mike, Brandon Gill, William Timmons and Brian Babin. They've said that the previous DOJ's action was a misguided crusade that came at the risk of harming America's relationship with a strategic geopolitical partner like India. Now, last year, we know that the Adani Group had rejected as baseless the move by the Department of Justice under the Biden administration to name the conglomerate in a case of alleged wrongdoing. Now, what they have said is that there has been no compelling reason to pursue DOJ indictment against the Adani Group, and this is in a manner that could complicate relations with an ally like India unless some external factors were at play, is what they said. Moving on, they said that the questionable pursuit of an case against the Adani Group is an unwise decision by the Biden administration. Moving on, politically motivated decisions by agencies steered by the left-wing megadonors could quickly erode years of hard work and diplomacy. The other point is that the selective pursuit by Biden's DOJ needs a second look, and that's a strong statement to come in as well. What they've indicated is that despite knowing the possible outcomes of such a reckless decision, it requires a second look 100%. Moving on, investigate Biden DOJ's conduct and share all the records pertaining to this case is what the congressmen have asked. They've also said that the real reasons behind decision to indict Adani's could uncover whether Biden administration was compromised to outside entities. And The needless pursuit against those who have contributed tens of billions and created thousands of jobs will deter investors. What this means is that clearly, considering these factors and the lack of any real injury to US interest, the decision to pursue this indictment demonstrates more harm for America's interest than good, if any. In addition, what they've said is that Biden DOJ indictment indicted companies' executives without any real injury to US interests. Biden DOJ should have referred the case to Indian authorities, is what all the 6 of them have said in the letter that they've written to AG Pamela Bondi. Apart from that, the decision has actually gone ahead and jeopardized relationships with close allies like India, and they should have referred the case to Indian authorities. Addition to this, they've indicated that India is an important ally to the US for decades, and especially against the growing threat from China. US relationship with India is rare and has no congruent. If there is any fallout in relations with India, it could actually benefit adversaries like China, is what they have indicated. And the end culture of lawfare, opacity and privatization of DOJ as the law firm of the left is the comment that has come in from the US congressman. Very lastly, they've said that they'd written to previously AG on the 7th of January and the 14th of January, but they did not receive any response. And they have request them to investigate Biden DOJ's conduct and would appreciate them sharing with them all records which are pertaining to this case for a coordinated effort in uncovering the truth. So clearly, a call to investigate Biden's Department of Justice, the letter by US congressmen that has gone to them and has actually slammed Team Biden.
Thanks, Hiral, for taking us through those details there. Now, the Securities and Exchange Board of India has barred LS Industries, its promoter Profound Finance, and 4 other entities from the securities market. This was an effect of the company's stock price manipulation. The regulator first observed an article written on the website of NDTV Profit on February 3rd, flagging how a company with almost negligible revenue had a valuation of 5,500 crore rupees. My colleague Charu Singh joins in now with more details. Charu, over to you.
So the market regulator, Securities and Exchange Board of India, has come out with an order against LS Industries, which is a textile company, and its promoter entity as well as other key individuals within the company. The regulator mentioned in its order that it started its investigation after getting triggered through an article that was published on the website of NDTV Profit on 3rd Feb 2025. Now what happened here is that as a news organization, we had flagged out that despite having no or zero negligible revenues for the past quarters, the company had a market valuation of over 5.5 thousand crore rupees. Now, SEBI, in its investigation, found out that there are several loopholes and gaps in the disclosures made by the company. It found out that the information given to investors to make their decisions was false, and the valuations and the frequency with which the trades were carried out and the disclosure entities that were, in a coordinated way related to the company were also having some shady transactions in relation to the trades that were being conducted, and that is why SEBI came out with an immediate order. However, a more formal and more detailed investigation will be carried out that has to be closed by May 15th this year.
Right, Charu. Thanks for bringing us those details there. Now it's day 2 of Aero India 2025, and we've been experiencing an enthralling display of innovation by defense companies. On the sidelines of the event, my colleague Sajit Mangat caught up with Munjal Shah of Paris Defense and Space Technologies and Sanjeev Singhal of Masgon Dock on what the companies are planning in the aerospace sector. Now take a look.
Paris Defense today is offering the widest range of optical systems one can offer in the country for all platforms across all services. This is like a one-stop shop for any kind of optical systems that the country needs, which is like a big offering. You don't have anybody else in the entire show offering so much of variety, right from a very, very small 300 kilogram weight of optical payload for small drones to the largest, which will be probably weighing about 90 kilo for surveillance up to 90 kilometers. So this is the biggest range we are offering and we are demonstrating here at the show.
Alpha, we have already delivered the first vessel in December last, and second delivery we are expecting sometime in April or maybe May, and then followed by third and fourth. So it is quite possible in FY26 we may deliver 2 of 17 Alpha. One is definite, and balance in FY27, the last one, and of course certain balance pending issues and the BND spares, they will spill over to 27-28.
So what is the kind of order book as of now, and where do you see the future order book coming in? What is the potential or prospective orders that are expected?
Yeah, right now we are having an order book of approximately 35,000 crores, 34,800 odd crores. And we are pretty confident with respect to the order being placed on Mazagon Dock Shipbuilders with respect to additional 3 submarines of Scorpion. The figures I would not be discussing here. But yes, it's a big order. And with respect to P75I, which is 6 submarines in which Mazagon Dock Shipbuilders is collaborating with ThyssenKrupp Germany. So this is definitely a huge order, and we are the only bidder who have been technically evaluated and found successful. The bids have been opened, so this process will also run. I expect during next 10 to 12 months, the order should be in place.
Now, beer prices in Telangana increased by 15% starting today as part of the government's new excise policy. India's top beer consuming state implements the revised prices to boost revenues from liquor sale. My colleague Uma Sudhir joins us with more details on this.
Beer is going to cost 15% more in Telangana, the largest beer consuming state in the country. Principal Secretary for Revenue for Prohibition and Excise, SAM Rizvi, issued the orders that the price of beer can be hiked by 15% from today onwards. This was on the recommendations of what is called the Fixed a committee that was set up in July 2024, and it was headed by former retired Justice Jaiswal. Last month, United Breweries, which in fact supplies 70% of the beer to Telangana, had stopped supplies, saying that the prices are not being increased by the state government from 2019-2020 onwards, and they also pointed out that they have huge dues from the state government. Subsequently, there were discussions that happened with the Telangana Beverage Corporation, which in fact has a monopoly for distribution of the alcoholic beverages in the state of Telangana. They had discussions with them, and following that they resumed the supplies, and now the Telangana government has increased the prices by 15%.
Prime Minister Narendra Modi today addressed a global AI summit organized in Paris. He spoke extensively about how artificial intelligence is playing a crucial role in daily lives of humans. While he advocated sharing the benefits of AI with all, especially the global south, he cautioned about the biases in artificial intelligence. PM Modi also spoke about the concerns of job losses due to AI and highlighted how this must be tackled. Trouble mounts for YouTuber and podcaster Ranveer Allahbadia over his remarks on India's Got Latent. While the 31-year-old has apologized for his crass comments, the row surrounding his remarks is snowballing into a major crisis. In fact, in Mumbai, multiple complaints have been filed against Allahbadia, who has 4.5 million followers on Instagram and 1.05 crore YouTube subscribers. Now, a parliamentary panel on information and technology is discussing whether to summon Allahbadia. Well, that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
बजट भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था
new tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invested? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invested? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands.
Hello and welcome. This is KYC, a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every single day. Well, today we are talking about a chemicals company, which in fact caters to the consumption space, the FMCG space particularly, but it also has a specialty segment going in for it. And Galaxy Surfactants, that's what we are going to talk about today. And it's come up with earnings which have been a tad bit disappointing. But, let's talk about the company in general. Firstly, as I was mentioning, it does cater to the performance segment and the specialty segment. In the performance segment particularly, what we are seeing here is that it does cater to largely detergents and the many other factors that come into place. It is essentially the performance segment that drives volumes naturally because it is consumer facing and it's something that always has a lot more in terms of demand. And specialty segment, of course, is driven towards premium formulations. This is something that actually aids margins for the company going in. So these are the two major segments that we are keeping an eye on. Of course, in terms of the revenue split too, performance segment will contribute to about 60% of your overall revenues, where the specialty care segment contributes to about 40%. It does have, the specialty care segment particularly does have premium offerings like mild surfactants and conditioning agents, as well as products used for skin care and hair care. And when it comes to the performance segment, that's some mass market products like SLS and SLES for detergents and shampoos. So again, a very interesting chemicals company which is consumer facing, but it also has several others working in favor of the company. But as we always do, let's take a look at the internals of the company, the fundamentals of how things have fared for the particular company over the past few years. And that could perhaps give us a base of what we can expect as we move into the next set of few years. So, as usual, what we do, as we talk about, the income statement under these circumstances, we talk about the balance sheet, the cash flows, return ratios based on some of these income statements and the balance sheet. Of course, we move beyond the financial statements. We talk about the shareholding pattern, current valuations, and the management pedigree. That's the new aspect that we have added to this particular, this particular piece on the show, and of course the outlook for the company as well. But for all of this, well, I am also joined by Varsha Chandani. She is also going to help us, get in a lot more insight in terms of how the company has done over the course of the last few years. So Varsha, thank you for joining us. Let's start as usual by talking about the revenue. How has the growth been? How has the profitability come about?
Well, thank you, Agam, for that. So, if I were to talk about the income statement, the revenue for the last 3 years, if I were to see on a CAGR basis, it's been like 11%, and the 3-year net profit CAGR is actually 0. Now, there's a reason behind that. So, Galaxy has generally, they normally talk about the EBITDA per metric ton. So, they have generally exceeded or met its EBITDA per EBITDA guidance basically. But in FY20 and 22, the actual performance was at the upper end of the guidance. While in 21 and 23, if you see, the company went beyond its targets, and with 23 particularly benefiting from one-time export incentive. But however, if you see in 24, in FY24, the numbers doesn't look that good. The net profit in 23 was like 381 crore, which is down, and in 24 it was almost 301 crore. Now, because the performance was close to the average of the guided range, given the challenges the company was facing when it comes to raw material volatility and market pressures. So, not good when it comes to financial performance, and specifically on the income statement side. And also in Q3 also, the company did not do well because of the lower demand when it comes to their India segment, and even company was facing pricing issues, and also the volume growth has not been that good for the company. So overall, yeah, not good when it comes to income statement, Agam.
Yeah, sure. So again, this speaks, and it's a reflection of the volumes growth, but the management is still very sanguine in terms of how they can expect things to turn out. Of course, single-digit volume growth is what the management is looking at, and which, at the size of which the company is currently, it could be a little bit of an underwhelming parameter there. But we'll talk about the balance sheet, and as far as the balance sheet is concerned, they're on a pretty stable footing. So firstly, they do have a reasonable amount of share net worth, but in terms of your long-term and short-term debt, it's not that much. In fact, a total of a little less than 100 crores in terms of your gross debt, and as against that, you have cash in bank standing at around nearly 200 crores. So it does seem like there's not much of a concern when it comes to balance sheet, which is why we'll give it a thumbs up. And again, it'll be curious to find as to how the accumulated cash and the accumulated profits of the company have panned out over or all the way until now. But, since we've spoken about, the income statement as well as the balance sheet, let's talk about the return ratios. Varsha, how are they looking at this point in time?
Well, Agam, if I were to compare this with 23, they are not actually great. So in FY23, the ROC was almost 24%. In FY24, it's 18%. While same goes with ROE also. It's in a downward trajectory. Now, the reason behind this is that, first of all, it is expected to expand in FY25, where it is expected, ROC is expected rather ROE is expected at 18% and to sustain over the next year. Now, this is on the expectation side. But during FY23, why the return ratios are actually looking good? Because the company benefited from, export incentives. So, company benefited from a 6% export incentive realized in the Egypt business, and a shift in the product mix also led to the supernormal profitability. And that's the reason we even saw in FY23 the company had a good financial numbers, good revenue and EBITDA, and followed by profitability because of the 6% export incentive, which has actually led to good return ratios in FY23. But again, in FY24 the company did not meet the expectations when it comes to financial numbers, and that's the reason we are seeing the drag in FY24 return ratio. So overall, doesn't look good, considering the FY24 numbers.
Sure. Well, fair enough. And let's talk about the cash flows then. And, we were a little bit split whether or not we should, in fact, give it a thumbs up or no in terms of cash flows. In terms of the real picture, what we're seeing is that cash flows from operation is a strong 580 odd crores back in FY24. And it's usually been pretty decent, at least as far as cash flow from operations is concerned. It's also improving if you consider how things have panned out about, maybe 5 years down the line, 5 years ago, back in FY 20, this same number was around 316. But it has had a positive net cash flow from operations for at least the last 10 years. On the other hand, when it comes to your net cash flows, well, that's been a little bit of an in and out number, at least over the last 5 years. But in the last 5 years, there's only been 2 years, of course, including the last year, where it's been a net outflow. And the outflow has not been considerable, which is why we thought that we'll give this a neutral rating and not necessarily a thumbs down. But on the other hand, we don't want to give it a thumbs up either, because at least on a net basis, while the company is putting in a lot of funds in investing, and while the company is putting in a lot of funds in financing activities, it does seem like it's not showing up in your statements, your financial statements, which is why we want to give this one a neutral rating as far as cash flows are concerned. Now, that's as far as your financial statements go. So overall, well, it's a mixed picture, and I reckon that the one feature that's working against the company is that while you do have a double-digit CAGR growth over the last few years, your profit hasn't really moved up, and that's because your margins have remained largely in the flattish range. But if you consider the shareholding, I want to talk about the shareholding. It seems pretty stable. So, we do have 71%, near 71% shareholding as far as promoters are concerned. FIIs and DIIs, we don't have too much of a change. It's the same for the others. I do want to say that in terms of some of your key investors, you do have investors like Abu Dhabi Investment Authority as a part of the, shareholder base. And besides that, you also have some pretty crucial AMCs who have shareholding in the company. So you have Kotak, Axis, Nippon AMCs, along with ICICI Prudential AMCs, all have a shareholding in the company. So that, of course, is always a positive. It does bode well because you have a fairly wide investor base as far as institutions are concerned. But that said, Varsha, let's talk about valuations. How do they look?
Well, Agam, because the company in FY24 mainly, the company has not shown that kind of performance. The valuation, if I were to talk about the valuation considering the trailing 12 months, it's trading at over 27 PE. Now, we all know that the chemical industry is under pressure and it was expected to improve in H2 of this year, but we don't know because still there are concerns when it comes to more on the agri-chemical sides. But yeah, overall we are seeing the pressure in the chemical cycle. But if I were to talk about the peer valuation for this company, you have Aarti Surfactant, which is trading at 44 PE. Now there's a reason for that because the EPS or the profits for this particular company has gone down so drastically, but market is not discounting the share price of this company. This is the reason you're seeing this high PE for especially for Aarti Surfactant. But overall, if you see BASF India is trading at around 30 PE, Rossari is trading at around 29 PE. So on and all, it's because the company has not shown that much of growth, and this is the reason we are seeing a PE of 27 for Galaxy Surfactant. But if I were to talk about the historical PE for this company, it's been pretty in the range of, median PE pretty in the range of 30. So yeah, on and all a neutral kind of rating when it comes to valuation. But if the specialty portfolio for this company increases and if company shows the increase in the volume target or volume guidance, and if the India region, the demand in India region goes up, maybe the number will go up for this company, and maybe the market will give the premium valuation that the company deserves.
Right. And, as Varsha mentioned that, these valuations have come off. The only reason why we're giving the valuations a thumbs up is because it does seem like, it's cheaper as compared to some of its other peers. But also remember that some of its other peers are showing a slightly faster growth as compared to Galaxy Surfactants. That could also be the reason why it's going at a discount as compared to peers. But if you just compare the valuations on an absolute basis, well, this is the picture. But, Varsha, let's come in and talk about the management pedigree as well. What can you tell us about this one?
So Agam, the good thing is the founders of this company have expertise in chemicals, pharma, and accounting. Of course, the CFO kind of that. But overall, being a chemical company, the founders have expertise in chemicals and pharma. The CEO, that is K. Natarajan, has 25 years experience when it comes to surfactant business. Worked with major global clients, and the whole-time director, Mr. Kulkarni, is also a chemical engineer and ex-MD of Galaxy Egypt. Many leaders have, so overall if you see the many leaders who are running this company have chemical and technical expertise, and this leadership actually aligns with the operations and R&D. So overall when it comes to Agam management pedigree, I think good people are running the show, good people are running the company.
Well, absolutely, spot on. And finally, I'll just give you a very brief update on the outlook. Because we've in fact are talking to the management in just a few moments from now. Well, the focus will of course be on specialty care. We've had a quarter, and maybe the fourth quarter could see a little bit of a slowdown as far as your overall numbers are concerned, but the management is suggesting that Q1 FY26 onwards, there is bound to be a little bit of an improvement in demand coming in. They have launched a lot of products right now, and the free cash flows remain healthy with a steady capex. So while capex comes through, we also have free cash flows which continue to come through as well. And on that note, let's take a look at how all these parameters come together and the kind of rating that they throw up. So as far as the income statement, balance sheet, return ratios and cash flows are concerned, your key financial statements, it's a very, very mixed picture at the moment. And about one thumbs up on the balance sheet, as I was mentioning. Moving on to the next set of parameters, a few more thumbs up in general here. And that's perhaps the saving grace for this particular company, because the outlook does look good. Considering the positive outlook, the valuations do look reasonable. The management pedigree and shareholding also inspire a lot of confidence in the company, which is why we've given it a thumbs up. And based on that, your overall rating comes to around 5.5 out of 8. But as I was mentioning, we were talking about the outlook going forward. So on that note, let's get the management to talk about it, where I asked the management, and I started by asking about the management about the current quarter, which has gone by, and how we can expect things to pan out over the course of the next couple of quarters. I spoke to Mr. K. Natarajan. This is what he had to say. Listen in.
What has happened in India in the last quarter, essentially was not something that the level to which it happened wasn't anticipated. All our customers also were talking about slowdown, but there's the extent to which it happened, and I think that was some surprise element. The reason that I am able to attribute is probably, I think, the consumer demand was expected to pick up during the festive season, and the pipeline was kept filled up with products. And I think as the months progressed, when that didn't happen, I think all the companies took the action to reduce the pipeline inventory, which caused a slowdown for almost all our customers in the quarter 3 of this financial year. As regards things getting better, we do see things getting better, probably not immediately in this quarter, but with what the government has announced in terms of putting more money in the hands of consumers to drive consumption, it would start showing results probably from the first quarter of the next financial year.
Okay, so you don't see that there's a structural change on the demand side and that these blips are temporary. Would that be safe to assume that?
Yes, I'm clear on that. This is just a blip, and it's not that it's happened in India for the first time. It's happened earlier as well. The India growth story is intact. There's a huge headroom for consumption to grow, and the government is doing all the right things to incentivize consumption. So yes, India should come back shortly into its growth trajectory.
Right, so can you tell me about the volumes growth for the quarter as well? And from what we understand, sir, you've you indicated for about 6 to 8% volumes growth. Do you still stand by it?
Yeah, from a midterm to long-term perspective, we stand by that. We will not be obviously meeting those targets of 6 to 8% in the coming year, because we just about 4% for the YTD 9 months. So we do expect that we'll close around slightly above 4% in terms of volume growth. But then we would probably wait for the next earnings call to be looking at whether we need to maintain the earlier guidance or we have reasons to revise it.
Right. So my next question is to do with your EBITDA per ton, which has also come off to a certain extent. And if I'm not mistaken, you guided for about 20,500 to 21,000. Is this small decline on account of operating leverage, that there's been a lack of demand and that would this eventually go up? Or do you think that there could be slackness for this particular variable as well going forward?
No, I think they should start getting to back to its the 20,500 base. There is a question of both operating leverage, okay, as also in terms of certain premium specialities that also needs to pick up in the rest of the world. Although the rest of the world grew well in terms of volumes by about 9%, my specialty portfolio degrew by about 4%. So this is more because some of the projects in pipeline haven't fructified, but then we are at having a good sense in terms of the fructifying the coming months. So we don't see this as something that will continue. We'll get back to the guided range.
All right. So I want to talk about your specialty portfolio a little bit more. So how are you expecting things to play out as we move into the next quarters, and what are the factors which could potentially drive growth for the specialty segment?
For the specialty segment, one is rest of the world, that is Europe and Americas are the biggest markets, and most of the projects in pipeline are in those countries, and we do see that there's a good reception for the products that we've introduced, as also for products that we have been we introduced some years back, all on the mild surfactants and non-toxic preservative segment, emollients and emulsifiers. So there's a good amount of work that has happened, and we do see the results paying off in the coming months. With regard to, say, the positives that can happen is with Europe can better, given the geopolitical situation can get resolved faster if things go well, as what we read in the media. I think that can be a big positive, and that will also be a good positive as far as what would happen in the Americas.
All right. So, and you know, in the past, the sector has faced supply chain issues. Have they been resolved largely? Are they on the way to being resolved? So what is the current scenario at this point in time?
The supply side has gotten much better, although not the same comfort as earlier, but I would say that they're significantly better than what it was compared to the first and the second quarter. Things have eased out, availability of vessels and availability of containers have become much easier. The on-time performance of the shipping companies are getting better. The Red Sea blockade, if it gets resolved based on the actions that have been taken recently, I think that can further ease the situation in terms of our logistics into the Mediterranean ports and to the US. As regards the logistics cost, yeah, they have started coming down, but not they're not back to the same levels pre-April when they started going up. But I think with things improving, that too should see getting back to the pre-April levels.
Right, so I also want to ask you about the Africa, Middle East and Turkey markets. And there was an indication that at least the demand in those markets particularly have reached near bottom. So how are you assessing things in the environment there at this point in time? There is an indication that we could perhaps see double-digit growth return from those markets. Is that a possibility? Is that on the horizon at the moment? How are these markets performing?
So Africa, Middle East, Turkey, if you see, although we were flat compared to the last quarter, but then quarter on quarter we have seen a good growth, because Africa, Middle East, Turkey, as far as our business was concerned, which happens majorly from Egypt, got impacted due to the supply side issues in terms of material not reaching on time, transit time going up to almost 2 months for raw materials going from Asia into Egypt. Those have got resolved. They're getting much better. And the demand situation is getting much better, given that most of the economies there have adjusted to the currency depreciation, and the foreign exchange situation in most of the countries are getting better, with some support from IMF and what the actions the economies themselves have taken. So we do see this momentum of growth for Africa, Middle East, Turkey business to continue. We're pretty positive about that.
Right, so and can you also tell us about new products that can be big value drivers for the future?
So new products, we have introduced a product called Derma Green, which is green oil-soluble surfactant used in shower oils. That was the last one that we introduced. It also won the Silver Award in Cosmetics Paris last year. That's receiving good responses, and we are building a good pipeline for that product. For the entire range of mild surfactants and non-toxic preservatives, we do see a good amount of traction happening in the US and in Europe. So things are looking pretty good. We only hope that the projects and pipeline get converted into commercial sales quicker than what is happening currently.
Right. So also, you've mentioned previously that EBITDA per kg will primarily be driven by the specialty care going ahead in the second half of the financial year. And you also mentioned the rest of the world volumes will be primarily what will drive specialty care. So your comments on this particular aspect going in as far as margins go?
Yeah, so margins will be better. That is what will drive up our EBITDA per metric ton, because the specialty products by definition are better margin products because it involves a higher gestation time and also bigger investments per metric ton. So they by definition will have to yield better margins. And it's only that we would want more projects to get converted and more faster. And that certainly would get us onto a much better momentum in terms of our EBITDA per metric ton going up.
All right. So finally, and you don't have any debt in your balance sheet. It's negligible, and you do have a substantial amount of cash, sir. What is the plan? What are the usage for this particular cash at this point in time?
We have certain plans in terms of how we want to be growing our business in line with the strategy. So yes, in fact, this sort of a strong balance sheet with absolute almost close to zero debt equity puts us in a very strong position to be able to access a lot of growth opportunities in this very exciting market space that we are in.
That's the management of Galaxy Surfactants telling us about all that's in store for the upcoming quarter. But that is all that we have for this edition of KYC. Stay tuned to NDTV Profit. We'll be back in just a bit.
Entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal year.
Hi, we're talking about Your Money Matters on NDTV Profit because we understand that your money matters. Do you have an emergency fund or a contingency fund, as some people call it? If you don't know what I'm talking about, you need to listen to this conversation. This fund is like a seat belt. You don't need it till you need it, and then you're glad that you had it. What am I talking about? And how much do you need to set aside? Should you do this before you start saving for your long-term goals? Also, should you use a credit card to tide over a crisis situation? We're going to discuss all of this and more on this episode. Joining me is Santosh Joseph, the founder of Germinate Investor Services. Santosh, thanks as always for taking the time. Let me start by asking, out of all of the people that you speak to, how many of them buy into this idea of an emergency fund, or do you have to convince them about it?
Hi, Alex. Good afternoon. Good to be back. There are a few people who are yet to come to terms with having an emergency corpus fund, though it may seem like an important decision that someone begins with. But it is also to do with some people didn't know that they needed to set aside money for emergency, because the traditional thought process is to have a fat savings bank account balance and not put a tag to it. But the minute someone like us goes into the room and tells them that it's nice to have a 6 months odd emergency saving corpus, many people immediately buy into the idea. And for most people, it's the 101 of beginning a journey of financial prudence. So therefore, some people need to be told, some people are ready with it, but the tag differs. But the people who are not aware of it, they are very eager and happy to start on this journey. And essentially, it is the first step towards getting yourself covered from financial prudence.
Okay, so you mentioned a 6-month amount, and we'll get to that in just a bit. But what kind of emergencies are you talking about? And here, I would like you to, and we're not trying to frighten anybody, we're trying to lay out possible scenarios so that they can guard against any eventualities that are not desirable. So what kind of scenarios are we talking about? We're talking about situations where you could lose your job or a health crisis, something like that, right?
You're right. So here, when we talk about an emergency corpus fund, we're essentially trying to solve for a financial emergency. Now, why does a financial emergency arise? It's one, a cutoff of income, or two, an unforeseen expense. Now, why is the cutoff of income happening? Primarily because A, maybe you lost your job completely out of the blue, or maybe you're not able to work. Could be an illness, could be an accident, or even could be a layoff that was unprecedented. Second, why do you need an emergency corpus fund? Assuming you're holding your job, assuming your income is intact, but suddenly you are hit with some financial expense which is outside your month-on-month planned expenditure. So it could come from two sources. One is cutoff of income or excess of expenses. In both the cases, it puts a stress on you if you do not have that approximate 6 months of savings, so that these kind of minor turbulences are mitigated.
Okay, so when you say 6 months of savings, what are you talking about? So 6 months of expenses, right, is generally what you cover. And so what do you include in those expenses? Do you include everything from your rent to your EMI to everything that you buy?
Okay, there are two ways to look at it. Either 6 months of essential expenses, or it could also be 6 months of your salary. Now, we are hoping that usually people save about 10% or 15% of their monthly salary. That turns out to be 80% either way. But it is a total expense list. Assuming that today you have to live your life normally, but you're not getting a salary, from rent to groceries to utilities to paying essentials to eating out to everything. And the more gross you make it and the more robust you make it, you're in a better shape. So therefore, 6 months of every essential expense that you need for the month would constitute the month into 6 months.
Okay, so here's the thing, right? A lot of people that I spoke to in the run-up to this conversation, Santosh, a lot of young people have said, we don't have that kind of money. It's not possible for us to put that amount of money aside. So just as an example, even if somebody is earning 50,000 rupees to start with, and it's such a good thing that the finance minister has ensured that these individuals will now not pay any tax. So that's a positive thing, and they'll be able to save more of their income. But even in that situation, you're talking about a situation where people are paying, 35,000 rupees on an average in expenses and everything that they have to spend on, right? So they have 15,000 rupees, but what do you do with that? You have various other things, other commitments, and so you're not really saving a lot. Even at your 10%, you're talking about 5,000 rupees per month. How are you going to do 35 into 6?
Alex, I'm glad you brought that up. It looks easy to save that 6 months corpus, but in practical application becomes a little more complicated. So there is a simple way. If you're only doing 5 or 10,000 in the example that you gave, it will take a couple of years before you hit that minimum threshold of 6 months. On the other hand, we prioritize this goal of having 6 months of savings. Basically get done with it. Try and see as early as possible that you contribute, you accumulate, you spend less. Ensure your 6 months of saving basket or kitty is done. Because once you do that, after you're done, now you got an emergency kitty, you got a salary, and hopefully the salary is growing as you grow in your career. You will be a lot more comfortable to spend. Now remember, when you're doing this, the biggest thing that's going to come against you is all the choices of consumerism and all the 101 expenses that will lure you into. So therefore, it needs a little bit of extra discipline to just ensure that the threshold of the 6 months is done with. Believe me, it gives a lot of people a lot of peace and a good night's rest just by having that 6 months of safety net for you.
Okay, so would you say that if it's impossible at the start to have 6 months, that 3 months is enough? So because it's more practical, that's the only reason I'm asking, because the argument really is, can you tide over 3 months without really having access to income? The reason I'm asking this is that a lot of young people will say, if push comes to shove, I can go back to my parents, I can go back to my family, I can go back to my folks. So there's not as much pressure as you might have later on in life, Santosh. And so what I'm saying is, have a practical solution to this.
No. So you're right, Alex. Not everybody's got the luxury of going back to parents or going back to friends to support them. We also have to acknowledge that today we're living in such interconnected world that many people are not even living in their own hometowns, and really they need
that 78 honorable members. 78 honorable members have spoken on this budget-related discussion. I'm very grateful.
Please, बैठिए सीट पे. Please, बैठिए सीट पे. No.
I'm very grateful, sir, that members have chosen to get into the details of the budget. Sir, actually, this budget has come at a time of immense uncertainties, and the change in the global macroeconomic environment makes it challenging. So, if there are challenges which have actually made the budget preparation with a lot more uncertainties, I have to at least put in front of the August House that there are issues which are of global concern, which also have an impact on our own budget making. There is a continuation of global conflict in the Middle East. Russia-Ukraine war continues. Stagnation in global GDP and sticky inflation in the emerging markets are all vitiating the atmosphere in the entire developing economies. Actually, what is happening is where we have ideally a situation which should encourage free trade, we are seeing more restriction. Where we very strongly vouch for globalization, we see a lot more fragmentation. Where we need fiscal prudence, we are seeing rising debt. Where we are seeing market forces which should actually play to make sure economies are going to be absolutely free and fair in its practices, we are seeing many restrictive industrial policies. We are also seeing that where multilateral forums should be playing a greater role, we are seeing bilateral partnerships and regional forums coming into play. So the world scenario in the last 10 years has actually turned almost 180 degrees, and as a result of which the challenges for any country in making their budget is far more complicated now rather than ever before. Now, as far as the first advanced estimates from NSO have come in, India's economy is expected to grow by 6.4% in real terms and by 9.7% in nominal terms. So during the current financial year, this is the picture which we want to present before you. The inflation trends, particularly food inflation, appears to be moderating. Sir, the union budget for 25-26 has sought to address these immediate challenges facing the domestic economy in the global context. It also rolls out futuristic path for transforming India into Vikasit Bharat. So our main goals in this budget, our main goals in this budget are to accelerate our growth, secure inclusive development, invigorate private sector investments, and uplift household sentiments. So with a focus on Garib, youth, Annadata, and Nari, the budget likes to reveal new schemes and reforms in the following broad sectors: promotion of agriculture, MSMEs, investments and exports as growth engines, and building rural prosperity and resilience. We also want to have employment-led development, spurring domestic consumption and boosting manufacturing in India, including export promotion. Continuing public capital expenditure, sir, and rekindling the animal spirits in the private sector to step up investments. And most importantly, investing in people, investing in economy, and investing for innovation. These are actually the union budget. These are actually the points on which union budget is focusing, so that we balance the national development priorities with fiscal imperatives. So, some of the budgetary outlays I want to highlight here, sir, so that it covers most of the concerns expressed by many of the members. The budget, first thing before I even utter the outlays for each of the schemes, I want to highlight one concept, if you want to say, effective capital expenditure. What is effective capital expenditure, sir, and why do we need to? I'm sure very many members of Parliament will fully be aware of it, but for the records, I'd like to describe it for a minute. Effective capital expenditure includes core capital outlays and the grants in aid for creation of capital assets. Though the grants in aid for creation of capital assets, sir, is accounted in our budget, is accounted as revenue expenditure, they go for creating capital assets in the states. So we include them when we talk about effective capital expenditure. In the budget of this year, 25-26, the effective capital expenditure is projected at 15.48 lakh crores as against 13.18 lakh crores in the RE of 24-25. So the effective capital expenditure in BE 25-26, sir, is about 4.3% of our GDP. That is only 0.1% of GDP lower than the fiscal deficit of this year, which is 4.4. This year meaning 25-26, which is 4.4% of the GDP. So the effective capital expenditure is 4.3% of GDP. Fiscal deficit, 4.4% of GDP. What does it indicate? It indicates that government is using almost the entire borrowed resources for financing effective capital expenditure. So the borrowings are not going for revenue expenditure or committed expenditure or any of those kinds. It's going only for creating capital assets. So in effect, government intends to use about 99% of borrowed resources to finance effective capital expenditure in the upcoming 25-26 year. I'll explain it, Professor, please. I've just begun, right? The sectoral outlays in the year 25-26 include agriculture and allied activities, which get 1.71 lakh crores, rural development, which gets 2.67 lakh crores, urban development and transport, 6.45 lakh crores, health and education, 2.27 lakh crores, defense, which excludes defense pension, 4.92 lakh crores. So I just want to highlight the fact, sir, that money is not being denied to any of the capital expenditure accounts, because I heard occasionally this argument being put forward saying, has the paradigm shifted from capital expenditure because that gives a greater multiplier effect to giving people, the taxpayers, some money in their hands for boosting consumption? No, these data from the current budget, which is before us, shows that capital expenditure outlays have not come down at all. On the contrary, they've gone up. So in this, most importantly, across all schemes, I want to highlight how transfers to the states, that is for the year 25-26, will be 25.01 lakh crores. Transfers to the states across all schemes. And I just want to go back to listing out how much after COVID the capital expenditure is increasing. At the same time, including tax devolution, finance commission grants, and funds for centrally sponsored schemes, 50-year interest-free that we give for the states, all put together, the transfer of resources to the states is growing by the year. 2020-21, sir, 13.44 lakh crores, which is an increase from the previous year, that is 2019-20, where it was 13.19 crores. 21-22, it rose to 13.40 lakh crores. It was 4,000 slightly less because of COVID-related issues, although we targeted a higher number. But in 22-23, it was 15.56 lakh crores, which is 2.16 lakh crores more than the previous years. And that is the year when we brought in the 50-year interest-free loans for states. Interest-free 50-year loans. 23-24, 17.98 lakh crores, which is again 2.42 lakhs crore more from the previous year. 24-25, 22.91 lakh crores, 4.93 lakh crores more. And this year, the budget which is before us, 25.01 lakh crores, which is 2.1 lakh crores more than the previous year. So the amounts going to the states have not come down at all. Sir, I will seek your indulgence, sir. I want to highlight the thought and the philosophy behind our government's budget-making processes, and also how in the last 5-6 years we have set clearly some practices which are, I would think, very important from the point of view of fiscal management. So allow me to just go through some of the points. It's been a conscious policy choice because it's part of our governance priorities, its commitment to fiscal discipline. So India's development story actually presents a stark tale of two opposite approach to budget making and also for fiscal prudence. So global financial crisis of 2008, once in a century 2020 COVID pandemic. But what happened after 2008 led us to become a fragile 5 country, whereas what is now happening is that you see we continue to remain the fastest growing economy. I want to highlight some of the very critical steps that we have taken in the fiscal prudence approach and also in budget making. So under this government, sir, India transited from the league of fragile 5 to become one of the top 5 economies of the world. 2021, sir, we had the devastating pandemic. Union budgeting reveals recurrent themes of transparency. Since that year, you will find our themes which are recurring are transparency in the budget making and also credibility of budget making, reforms to catalyze growth, targeted social security, and use of technology for obtaining value for public money. I'll just give 2 examples or sometime even 1 example for each year. 2020-21, sir, we took a giant step of bringing on board the FCI off-budget borrowing of 1.2 lakh crores. Food Corporation of India had continuously maintained off-budget borrowings. That year we took a major step of bringing all the off-budget borrowings of FCI, which totaled to 1.2 lakh crores onto the budget. So that enabled better public understanding and discourse on government debt, and also brought in a sense of credibility to the budget documentation itself. That year, another step, sir, we have also partnered with the states to deepen the multiplier effect on capital spending by providing them with the 50-year interest-free loan. From an allocation of 12,000 crore in 2021, it has now in the current budget reached 1.50 lakh crores. So it is not just us believing in multiplier effect by spending on capital asset building, but we have partnered with the states, and states are really actually speedily coming up with a lot of proposals, which is very, very good, and we are able to give them that kind of money to support their proposals. 21-22, sir, the year after that, again 2 steps which I want to highlight. Mahua, Ministry of Housing and Urban Affairs, off-budget borrowing was also taken on board. We brought on record the off-budget borrowing of urban housing of 33,000 crores on the books of government by prepaying it. By prepaying it, sir. So we bought it on books and we prepaid it, and that's a major initiative that we've taken to make sure the budget's transparency and nothing outside of the budget will be done. That was the second major step. The first year it was FCI, the second year it is Mahua's. That year, again, just-in-time release and transparency in flow of funds to the states, the single nodal agency model was introduced, so taxpayer money goes to the states just in time for them to use the money, and there is no difficulty in that kind of a quick disbursal of resources. That's the second major step for 21-22. 22-23, sir, debt consolidation of agencies for better fiscal planning on borrowings. Professor was very worried about the borrowing, the debt and everything else. This is one of the points which I want Professor to consider as to why consistently between 2021, we are taking measures to reduce debt, at the same time make public money go for productive asset building activities. We commenced financing of capital outlay of railways and highways from the union budget that time, 22-23. This allowed for debt consolidation, particularly railways debt consolidation began happening from that year of these agencies and helped lower cost of borrowing. So as borrowing by government is cheaper than borrowing by agencies, so efficient use of money, there also we have shown that this kind of a step can actually better utilize taxpayers' money.
Regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Government is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
देश बनाए, क्लियर ग्लास ऐसे जो दुनिया दिखाए, मिरर ऐसे जो सपने दिखाए, रिफ्लेक्टिव ग्लास ऐसे जो धूप से बचाए और बनाए घर ऐसे जो परिवार बसाए। अपना देश।
Another day, another bloodbath for the markets as the mid caps and small caps go into free fall. All indices in the red. Realty and media stocks dragged down. The rupee recorded its largest surge in more than 2 years. The 84 paise spike is the currency's biggest jump since November 2022. Traders say the Reserve Bank of India stepped in to support the rupee. President Donald Trump halts prosecution under the Foreign Corrupt Practices Act of 1977. He says he wants to reduce enforcement on US companies. Six US congressmen write to the new Attorney General Pam Bondi demanding an investigation into the Department of Justice under Biden. Citing the Adani case, they write that DOJ under Biden had endangered the important equation between the US and India. It's an NDTV Impact story now. SEBI exposes LS Industries 5,500 crore valuation as stock scam. This is after NDTV Profit flagged how the company with almost negligible revenue had a valuation this huge. Prime Minister Narendra Modi visits France to co-chair the AI Action Summit with President Emmanuel Macron. His three-day visit is expected to hold bilateral talks with and address business leaders. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Himakshi Bahuguna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. So viewers, benchmark BSE Sensex was down 1.32% while Nifty declined on back of Trump's tariffs. All sectors were seen in red with media, auto, PSU, banks down almost 3%, dragging the markets lower. Harsh joins in with more details.
Second consecutive difficult day of trade that we've seen today. 1% shaved off the Nifty as well as the Sensex. 3% plus shaved off the Nifty mid-cap and the small-cap indices. So the pain in the broader market extremely real. We're now seeing 15 to 17% lower on the mid-cap and small-cap index. $11 billion worth of FI selling, really pressuring markets at this point. And essentially, that's the theme that's playing out because across the board, there is selling. The breadth is extremely weak for a second consecutive day. Now, it will be really important to understand how tomorrow plays out. But for the moment, let's break down today. Now, earnings, of course, in focus. Grasim did well on the back of that. And just about staying in the green is doing well in a market like this when the breadth is extremely bad. What didn't do well, some of the auto counters didn't do well, and Escorts and Eicher on the back again of numbers. Adani Enterprises was the top Nifty gainer, largely on the back of the fact that you had some bit of relief from the United States, likely impacting that counter. But outside of that, the breadth extremely weak. Less than 200 gainers to the 2,000 plus losers that we saw on the National Stock Exchange today. So the breadth extremely difficult and lots of stocks falling 3, 4, 5, 6, 7 and some even 8 and 9% lower on the back of pretty much no news. It's just the relentless selling that we've seen which is pressuring markets at this point. Let's talk about the sectors as well. Realty, second consecutive day where it's fallen 3% plus. The Nifty Bank outperforming the Nifty 50. I don't know how much that counts, but 1% lower versus the 1.3, 1.4% that the Nifty corrected today. And therefore, that bit of positivity. Outside of that, all sectors painted red. The VIX spiking by 3.5%. So all of that is what the market looked like. Last off, some names which were really flying around in trade. And some real buzzers, more on the downside than on the upside. Very few on the upside. And that's the list of BSE 500 top gainers, top losers in front of you. Really not reading too much into them because that was just the way in which the day played out.
Right, Harsh. Thanks for that market check. Now, a significant portion of investments should be allocated to large cap funds to ensure consistent returns over time. This is what Sridhar Sivaram of Enam Holdings had to say, being bullish on large caps. He also said that 2025 could be a challenging year as markets may not yield positive returns. Listen in from his conversation earlier today with NDTV Profit.
If somebody asks me, I say you put it in a large cap mutual fund.
Yeah.
A large part of your flow should be in large caps. You can put a small percentage in small and mid cap because That's how returns will be over a long period of time. I think large cap looks reasonably good. And they should, over a period, they should mimic the returns that they've given over the last 5 years, 10 years. It's very difficult to predict 6 months, 1 year. We haven't had a negative year for what, 7 years now or 6 years? It's not a norm that every year you will get positive returns in the market. This is an exception. So it's easily possible that 25 is a negative year. I don't know, but I'm just saying that it's possible that 25 is a negative year. So be it. Over a period, this will happen. It is not a norm that every year markets have to give positive returns. That's not how it is.
The rupee jumps more since November 11, 2022 after strengthening to 87.48% dollar level yesterday. The rupee weakens 84 paise against US dollar. In the wake of sharp rupee depreciation in recent weeks, it appears that the RBI has decided to step in and take control of the volatility. My colleague Vishwanath Nair joins in now with more details.
So Tuesday saw the rupee recover sharply from its low levels of about 87.95 reported on the 10th of February to then end at about 86.83 against the dollar. If you were to take away the sudden appreciation on Tuesday, then the rupee weakness would have been about 2.7% since January 1. That would have made rupee the worst performing currency amongst the Asia Pac, ex-yuan and ex-yen. Now, it is interesting to note that after accounting for yesterday's sudden appreciation, the rupee weakness against the dollar stands at about 1.36%. That's a significantly better position for the rupee than what it used to be. Now, what traders are telling us is that because of the rapid depreciation of the rupee over the last couple of months, a lot of speculative positions were being built against the rupee. A lot of speculators believing that the rupee would hit 90 against the dollar very, very soon. The RBI in its intervention has communicated to the market that while rupee will depreciate, it will do so only in a slow and steady manner, and that the RBI will not tolerate any rapid depreciation of the rupee or any speculative pressure against the rupee. So that's what this sudden intervention and the sudden improvement in the rupee on Tuesday meant. Now, if you were to compare the rupee against some of the other large Asian currencies, the Taiwanese dollar has actually done better than the rupee, about 0.12% lower compared to the dollar. Thai baht has actually appreciated about 0.87%. The South Korean won again appreciated by about 1.8%. Indonesian rupiah down about 1.53. That's the only currency that has performed worse than the rupee, accounting for Tuesday's sudden improvement. Malaysian ringgit, of course, also appreciated about 0.5%. These are numbers, of course, year to date. So that is since January 1, how these individual currencies have performed against the dollar. And clearly the rupee currently is the second worst performing currency amongst all the other Asian currencies in the market.
Thanks, Vishy, for taking us through those details there. Now, in the short term, the rupee may gain, but in the long term, it's the inflation differential that matters. This is what CA Nageswaran had to say at the IVCA Conclave 2025 on the rupee depreciation. Listen in.
The rupee's annual depreciation was about 3%. And that is partly because, I mean, not partly, largely because India's inflation rate differential to the US was about 3%. So in the long run, and I mean, I was a teacher, before coming onto this job, I was a teacher also, and I used to tell my students, if you have to forecast exchange rates for about 3 years, the best thing to do is to open your wallet, pick up a coin, toss, and decide if head comes, currency depreciates, and if tail comes, currency appreciates, and you will be as successful as any forecaster. So when it comes to short horizons, up to 3 years, it is anybody's game. But in the long run, which is 5 years or beyond, it is ultimately boils down to inflation differential. So in that sense, as long as our inflation rate is 1% or 2% above the average inflation rates of developed countries or the US, to that extent the currency will depreciate. But the point is, this currency depreciation hasn't prevented India from delivering returns to investors, whether it is direct investors or portfolio investors, or even PE, VC investors. In the last 2 years, we have had tremendous exits, quite profitable ones, that attest to the strength of the depth of the capital market options available for investors. And therefore, the rupee depreciation is something that one can factor into investment decisions.
President Donald Trump has signed an executive order rolling back enforcement of a Foreign Corrupt Practices Act, or the FCPA. The act bars a company or person with US links to pay money or offer gifts to foreign officials as a way to win business overseas. Trump weighed trying to scrap the law during his first term. The fact sheet mentioned that US companies are harmed by FCPA over enforcement because they are prohibited from engaging in practices common among international competitors, creating an uneven playing field. In fact, we also spoke to a senior advocate of the Supreme Court, Gopal Jain, and market veteran Sunil Subramaniam on how the removal of FCPA is an important step before PM Modi's visit and how it will help American businesses. Listen in.
It's like a big package. Everything will get weaved in. And I think the key focus obviously seems to be to give a fillip to American businesses and remove this overhang which has been there. So it's sent a positive sentiment. And I think in line with the new ethos and thinking, the revised guidelines will reflect that. So I think it will be a significant change from the existing framework and structure to the proposed new framework, structure, or guidelines that they will come up with. And I think, like we say in India, perhaps this is another facet of ease of business is what they have. And it will probably generate a lot more business in America. And two, the timing of the meeting of the two leaders is important. It will give them a chance to discuss a lot more without some of the thorny or tricky or prickly issues bothering them. So I think it also, in that sense, paves the way for much more constructive dialogue on the way forward for the two countries.
I would say that this clearly indicates that for Trump, more than being the president of the United States, he is acting like the chief business officer of the United States, right? So obviously in every decision, even if you look at it from the Trump tariff perspective, he's used the tariff to extract concessions for American businesses, to make America great again, American businesses great again. So this is another step there. And I think what this augurs will see, the US through this act was trying to behave like a moral god, that anywhere in the world a US company does anything corrupt, then they will be hauled up in the US. So I think obviously when they're competing with Japanese companies, Korean companies, European companies in the emerging market space, there are practices like this which are very often done. So I think that this gives a level playing field to American businesses. And I think the timing of it before Mr. Modi goes there is critical because, obviously he's seeking to promote American businesses in India. And locally, there are adjustments to be made. Now, obviously, this clears the path for more American businesses to operate in international economies and including in India. So I think the relevance in terms of timing is also very important. Then second, that it's also very clear that Trump is not going around doing soft power, right? He's not pussyfooting around it. He's there, he says, I will suspend this law. He's willing to use his executive powers to do that. So it clearly shows that he's a man of action. Now, some may like it, some may not like it. But at least you get the clarity that he's very firm on what he believes, he'll go and practice. So in that sense, he's a WYSIWYG. What you see is what you get. So to that extent, for the markets, right, this has been a big boost because every American company operating in India, they would always be thinking, no, somewhere some of their partners, right, they engage with subcontractors. Some subcontractor pays a bribe somewhere, that company will be hauled. Was an overhang which was probably a deterrent to American businesses going and competing in international spaces, including in India, and this will free up that. And
Now, in another significant development, 6 US congressmen on Monday wrote to a new Attorney General, Pam Bondi, and demanded a probe into the previous Department of Justice's indictment of Adani Group officials. We have Hiral on standby to offer more perspective on this. Take it away, Hiral.
A strongly worded letter to Attorney General Pam Bondi, the 6 US lawmakers, that's Lance Goodin, Pat Fallon, Mike, Brandon Gill, William Timmons and Brian Babin. They've said that the previous DOJ's action was a misguided crusade that came at the risk of harming America's relationship with a strategically and a strategic geopolitical partner like India. Now, last year we know that the Adani Group had rejected as baseless the move by the Department of Justice under the Biden administration to name the conglomerate in a case of alleged wrongdoing. Now, what they have said is that there has been no compelling reason to pursue DOJ indictment against the Adani Group, and this is in a manner that could complicate relations with an ally like India unless some external factors were at play, is what they said. Pursuit of a case against the Adani Group is an unwise decision by the Biden administration. Moving on. Politically motivated decisions by agencies steered by the left-wing megadonors could quickly erode years of hard work and diplomacy. The other point is that the selective pursuit by Biden's DOJ needs a second look, and that's a strong statement to come in as well. What they've indicated is that despite knowing the possible outcomes of such a reckless decision, it requires a second look 100%. Moving on, investigate Biden DOJ's conduct and share all the records pertaining to this case is what the congressmen have asked. They've also said that the real reasons behind decision to indict Adani's could uncover whether Biden administration was compromised to outside entities. And the needless pursuit against those who have contributed tens of billions and created thousands of jobs will deter investors. What this means is that clearly, considering these factors and the lack of any real injury to US interest, the decision to pursue this indictment demonstrates more harm for America's interest than good, if any. In addition, what they've said is that Biden DOJ indictment indicted companies' executives without any real injury to US interests. Biden DOJ should have referred the case to Indian authorities, is what all the six of them have said in the letter that they've written to AG.
Rural development have increased from 4.16 lakh crore to 5.54 lakh crores between 2021 to 25-26. So there is no cut in any of these. Repeatedly we have people asking questions. It's okay to ask questions, but I'm giving you the answer that nothing has come down there. So fiscal consolidation was another issue on which many members were worried, saying is it being done at the cost of public spending and social sector spending? Education budget reduced, PM Poshan, Jal Jeevan Mission, Awas Yojana have all of them come down, post-metric scholarships. I'd like to answer all of them, sir. Social welfare, the budget has increased from 56,501 crore in 24-25 to 60,052 crore in 25-26, not gone down, from 56 to 60. I'll come. Education, sir. Education, sir. 1.26 lakh crore in 24-25 has gone to 1.29 lakh crore in 25-26. Education का भी कम नहीं हुआ, ऊपर से ज़्यादा हुआ. Health, 89,287 crores in 24-25 has gone to 98,311 crore in 25-26. Sir, I like to highlight one point at this time. Again, substantive, budgetary, technicality, but it's important because technology which has been adopted for budget and budget management has today given all of us the advantage of getting facts by looking at the portal or by looking at the documents. Nothing can be hidden in this day and age because of technology. And therefore, I'd like to draw the attention of the honorable members for a statement which has been provided called expenditure profile. It's a statement 4AA. I want to show how unspent balances are remaining and how much is it totaling to unspent balances. 1 lakh crore as of 31st December 2024. How unspent balances are remaining, and for us to see it, sir. The expenditure profile statement. This is along with the budget, it's been already presented. 1,395.45 crores is lying either in the SNA account or in the treasury or in an escrow account in the states. In the states. 1,395.45 Rashtriya Krishi Vikas Yojana. On that head of account, this much money is lying there yet to be utilized. 4,636.55 crores is lying in the states, assistance to state agencies for intra-state movement of food grains and the FPS dealers margin under NFSA. National Food Security Act. Many honorable members are really concerned, and I can understand the concern. But if money is lying in the accounts, if you just give the utilization or raise the bills, you get the money. It is in your account there, SNA account there. Please take it. It's already in your account. But no, you're not giving money for Food Security Act. Why not? We are giving the money. It's there. Would you like to use it? This is a statement attached to the budget documents. I would like the honorable members to see where the money is lying. And despite that, more is being asked. You ask more, no problem. The moment you use this, we'll give more. Yes. The next, Samagra Shiksha. 11,516 is lying there in the states. Would you please use it? There was a lot of concern on portion. PM Pradhan Mantri Poshan Shakti Nirman, erstwhile national program for midday meal in schools. 5,205 crores are lying in the state accounts. And this is for Poshan Abhiyan. And here I hear voices. प्रधानमंत्री जी, बच्चों का न्यूट्रिशन के ऊपर आपको कोई ध्यान नहीं है क्या? अरे पैसा आपके अकाउंट में है भाई, यूटिलाइज करो. हमने तो दे दिया पैसा, आप क्यों नहीं यूटिलाइज कर रहे हो? मुझसे पहले हमें क्यों पूछ रहे हैं? So, go use it. This document is available. Have a look at it if I'm saying anything abrupt. So next, sir. These are not chota-mota amounts. These are big amounts. I want to ask question therefore. Sir, flexible pool for RCH and health system. Sir, I've heard health minister Jagat Prakash Nadda ji. No, you can always ask me, Supriya ji, all the questions, but I've heard you all. I want to come up with my answer. Please have patience, and you may ask me again. But if I'm telling you anything that which is not already available with you, I'll be ready to answer. But it is there. What proof of a budget document by? Ay, Bhagwan. Budget document hai bhai. Sir, flexible pool for RCH, health system, strengthening National Health Program and National Urban Health Mission. National Urban Health Mission. How much is left in the accounts? 2,988 crores lying with the states.
Entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
First of all, they're looking at, how to sort of reduce the number of slabs which is there in custom, which is like 12 or 13 slab, and how to bring it down to 5 or 6.
As a part of comprehensive review of customs rate structure announced in July 2024 budget, I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. After this, there will be only 8 remaining tariff rates, including 0 rate.
देश का 55% एक्सप्रेसवे उत्तर प्रदेश के पास होगा। सबसे अधिक रेलवे नेटवर्क वाला प्रदेश उत्तर प्रदेश, सबसे ज्यादा एयरपोर्ट वाला प्रदेश उत्तर प्रदेश, सबसे ज्यादा मेट्रो संचालित करने वाला प्रदेश उत्तर प्रदेश।
And soon, UP will be the first state with 21 airports, 5 international and 16 domestic, taking air connectivity to new heights. From roads to runways, UP is building a future of seamless travel.
Are your small and mid-cap investments safe? That's the big question we're talking about today. Welcome to the show. I'm Tamanna Inamdar. One of India's most seasoned fund managers, ICICI Prudential CIO S. Narain, at an event recently has issued a warning so blunt, it's almost unheard of in the investment world. His exact words, among many, we think it is a clear time to take out lock, stock and barrel from small and mid caps. S. Narain called the coming decade the most dangerous after 2007-8, and he categorically stated that unless you are planning to stay invested in the mid and small cap space for 20 years, take your money out, adding that the outlook for SIPs starting 2023 onwards is very bad unless they're 20-year SIPs. Now, this is particularly worrisome, considering the total share of inflows into small and mid-cap schemes was 40% in 2023 in mutual funds. Here's Naren's argument. He says that banks are taking minimal risk in terms of giving loans to mid and small caps, so these firms are coming to the market with QIPs and other offerings and raising money from the retail investor. And Naren says all the risk is being borne by investors like you. I don't think either investors or wealth managers have fully realized this yet. So now, fund managers rarely say stuff like this openly. Their job is to attract investors to put in money in their funds, not advise them to pull it out. And yet Naren isn't mincing his words. He says even SIPs are not foolproof as investments, stressing that their success depends on market conditions. Now, why are we talking about S. Naren's comments today? Because, and not only because of, but since those comments, we have seen a steep correction in both small and mid-cap indices in the equity markets. Overall, of course, you have seen markets on a downward trend. 75 of 150 mid-caps have fallen over 20% from their highs. 22 of 150 mid-caps have plummeted over 30% from their highs. Small caps are in even deeper trouble. 121 of 250 small caps have fallen over 20% from their highs, and 51 of 250 small caps have erased more than 30% from their value. And if that wasn't enough, every single mid-cap and small-cap fund has given negative returns since September 2024, which is why the question we're asking today is, what do you do with your investments in this space? Before we get to our panel on it, let's listen in to some of S. Naren's comments.
Small cap and mid cap is something which is absolutely absurd on the market cap side, but is the chances of a bad return in SIPs is also very, very high at this point of time. Today on momentum indicators also, both mid cap and small cap are broken completely and decisively at this point of time. Small cap and mid cap is something which is absolutely absurd on the market cap side. In 2013-14, it was very, very cheap. And from 2013-14, it has gone to extremely absurd level on market cap side. Okay, we said, are we looking at it wrongly? Because after all, India is growing, so mid cap, small cap will keep growing. Then we looked at median PE. We found that we looked at median PE as a model. When we looked at median PE as a model, we found that the median PE of mid-cap has touched 43 and the median PE of small cap has reached 43. Again absurd at this point of time compared to what it used to be. And then we looked at what is the entire PAT contribution versus the market cap on small mid. That again shows that small mid, the market cap contribution is much higher than the PAT contribution. So, okay, so there were people who said, you are looking only at valuation, is momentum changing? So we started to look at mid-cap momentum over Nifty. Even on mid-cap momentum over Nifty, we have a situation where the momentum has started to weaken and it has cut its DMA. I'm not the expert on momentum, so I went to one of my colleagues who is a very good quality momentum person. He says that you are very early, but now the momentum is cut. So on momentum also now mid-cap is cut. And similarly on momentum also small cap is cut. These things have happened in the last one month or so, that today on momentum indicators also, both mid-cap and small cap are broken completely and decisively at this point of time. So the chances of medium-term returns in SIPs are likely to be low. If you're going to do a 20-year SIP from 2025 to 2045, will it be low? Answer is no. But is the chances of a bad return in SIPs is also very, very high at this point of time. particularly SIPs which have started after 2023 or so. I think the chances of them which have started from 2023, I think the outlook for those SIPs look pretty bad unless they are going to be 20-year SIPs. My own view. Clearly hybrid. I think hybrid schemes are absolutely attractive at this point of time, depending on how positive you are on the market. If you are very positive on the market, it would be equity and debt. If you are less positive, it would be multi-asset, particularly if you like gold. If you are slightly even less positive, it is multi-asset allocator and balanced advantage. If you are negative, it is equity savings. Clearly, that would be one area very clearly. On market capitalization, FIs have just sold so aggressively at this point of time that we are very, very clearly in favor of funds which invest in mega caps like minimum variance fund.
All right, to take this conversation forward, I'm joined today by Ashish Somaiya, CEO, White Oak Capital AMC, Mihir Vora, CIO of Trust Mutual Fund with us, in fact, in the Mumbai studios, Feroz Aziz, Deputy CEO, Anand Rathi Wealth, also joining in. Welcome to all of you and thank you so much for speaking with us. Now, I know some of you or maybe all of you are not going to be wanting to comment on someone else's comment. So let me get that straight out of the way. This is not standing in judgment of whether what S. Naren said was correct, not correct. This is a question right now in everyone's mind, and which is what we must address. So with that context, let me come to you first, Ashish Somaiya. Was it not refreshing, in a way, to hear someone speak completely unfiltered about information that doesn't get out there to the average investor?
Yes, certainly it is refreshing. You know, one of the most, respected voices in the industry, spelling aloud his thoughts. It is refreshing to hear a comment like that. But a couple of things I want to tell you, if you see small cap as a space, it is known for volatility. So let me just recount, some simple data to you. A few years back, say January 2018, small cap made a peak. And then, it was one way down till April 2020. And then October 2021, again, we made a new peak in small cap. And then it was one way down till March 2023. And then, recently we made a peak in 2024. So here I've given you 3 to 4 examples. And what I have seen in my own, 25 years in the industry, I've seen that in any given 5-year time frame, it's not unusual for small cap indices to show volatility and fall 30-40%. And then eventually also make a new high, right? So that's the feature. It's not a bug. That is how it has always behaved. The second important thing is, at least me, for example, or my firm, we actually don't even have a small cap fund, right? But let me just clarify to you, none of us advocates investing in small cap with the assumption top down that small cap will outperform large cap. But yes, our portfolios do have small cap investment for a simple reason that it's the most heterogeneous space in the market. If you look at large cap, you have HPBP IOC, you have TCS Infosys, you have the big banks, you have energy, you have oil, you have utilities.
IT, too much of banking, too much of IT.
It's all, so what I'm saying is it's all macro policy driven. It's all homogeneous. I can't generate alpha just by buying all of that. We need small caps because that's the heterogeneous space. That's where the rising sectors are, and that's where we generate alpha. So that is our case, right? And I think, small cap exposure is needed to generate alpha. That's where I will leave it. And it's known to be a volatile space. I mean, there's nothing new which is happening right now.
No, but what is new is the comments. What is new is the comments, and what is new is the way the market has reacted. Yes, small caps are riskier. Yes, small caps generate alpha. For those of you wondering, what do we mean? If you want super normative or really, robust returns, you look at small caps. And if you compare what small cap funds have been given versus large cap funds in the last 2-year bucket, you will see why there's so much of inflow going into small cap funds versus large cap funds, or small and mid versus large caps. Mihir, in fact, the flavor of 2024 was thematic funds. So that's what the mutual fund industry does. It sees where the money is coming and you have products accordingly. But what we're hearing from S. Naren, a warning bell, because he's saying that there are a lot of fund managers who who have not seen a bearish market for a while. They don't know how to deal with it. The people handling the money day to day are also not aware of what to do when the tide turns, and the tide seems to be turning.
Sure. So first of all, I don't know how to slice and dice this, but the point is that fund managers may or may not have the experience, but fund houses do.
Yeah.
Right? And mutual funds are such a well-regulated product, such a transparent product, that you are just trying to generate alpha versus the benchmark. So you can't be too far away. Of course, you can be if you take larger than life bets. But given the way that processes, systems, and SEBI has been tightening the mutual fund industry, there is not a chance that you can be completely way off the benchmark for a prolonged period of time. So ultimately, it's a question of asset allocation, right? What returns the particular asset class will give, whether it's equity versus fixed income, or within equities, large, mid, small, thematic, etc. So, let's get the debate out of the way that fund managers can mess it up completely by not taking a call, because the asset allocation call is done by the investor or the distributor or the advisor.
No. So what is the debate? So you're saying it's not the fund manager's fault?
No.
Or responsibility?
The fund manager's job is to invest as per the mandate, right? So if he's getting money in a large cap fund, he obviously has to have 65% in a large cap mandate.
Okay.
Right? If it's getting money in a small cap fund, he has to put money in a small cap fund. The point is, the advisor or the investor has to take the call, and of course you can check with the fund manager what the preferences are. That's a different debate altogether. But as an asset class, you need to invest in the relevant category. I think that's where the debate is. Now, if somebody is giving his view, that's a call that one needs to take. But as an investor, ultimately it's your call or your advisor's call.
Okay, maybe that's a careful answer. I appreciate how careful you are with this answer, but I'm going to ask you straight up. If I put in a small cap fund in 2023, do I have to wait 20 years for positive returns? That's what one of a very respected voice in the industry is saying. Frankly, that's the fear on the street right now,
Sure.
and I think we should address it heads up.
Sure. I mean, I don't want to comment on the comments as you mentioned in the beginning, but if you were to go by history of the Indian markets, whether it's the large cap index or the small cap index, 10-year rolling returns for most of the indices have never been 2 less or never been 0, right? The point is, if you hold for a period of which is 10 years or more, then the probability of losing money is really less. And that's what the statistics tell you. Now, you can slice and dice it either way. I talked about rolling returns, which is a point-to-point lump sum investment. The returns for SIPs are even better. So if you look at a 10-year SIP for a large cap fund or a mid cap fund or a small cap fund, it is pretty healthy if you hold on for 10 years. The characteristic of the market is that, typically, and right now we are in a state of concern because the markets have corrected and the small cap indices have corrected. But that's the nature of the market, right? Typically, what you see is that the upswing are steady and the falls are sharper, right? So if you are going to invest over a period of time, right, bear the fall and let the market rise again in its natural course, then the probability of losing money in a systematic investment plan is very, very less, I would say. That's the nature of the plan, and that's the reason why the whole industry has been advocating SIP karo, mutual funds SIP karo, because statistics proves it.
Okay. One of the comments made, and I keep peppering with this, is maybe look at stopping your SIPs in small and mid cap. I mean, here is, I think, where the alarm bell really comes in. Feroz Aziz, I want you to come in on the ongoing debate, and of course I'll ask your view on what you're telling investors and what they think, but I'm getting that quote specifically. Investors should reassess if they wish to continue their SIPs in small and mid cap schemes. Right now, I think maybe what fear we are seeing in the market is that the bulwark of this market, the main support has come from investors who diligently, eyes shut, have been putting money in SIPs month after month after month, believing that this is the path. Their faith is getting shaken now. Let me be very honest, that faith is getting shaken now. They need to be reassured, or they need to be told what is going on. Feroz Aziz.
Yes, Tamanna, Naren Saab is of course a very, very respected name. And when he says it, we stand up and listen. But we have to also listen to some data. which is there. So I personally think there's no retail investors should always invest in 3-4 schemes, right? He's not going to buy a small cap fund only. I would say that if you have the third scheme as the small cap scheme, you have to not be worried at all. And if in a decade, if a small cap fund does not make positive return, we have a larger problem to solve as a country. Because small cap is the word small cap itself. I debate the word small cap. The 250 companies, there are 2,307 NSE traded companies, out of which top 500 में large, mid, small खत्म हो जाते हैं. So the other 1,800 stocks don't even have a space in the mutual funds definition. Can you believe it? And we still call them small cap, and the small cap is a 50,000 crore market cap. When an investor is thinking small, he's not thinking of 50,000 crore market cap. When he's thinking mid cap, he's not thinking about a 1.5 lakh crore market cap. About six years back, the largest small cap was 8,300 crores. Today it is 45,000 crores. So the word still is small cap. How can you still
So I'll just add there. The person who's investing is not even thinking about market cap. They're thinking about returns. Let's be very clear. This is stuff we talk about. They are going to their advisor and they're saying, "Paisa kahan lagao? Are small cap chal raha hai, usme lagao." Let's be very honest. What's going on?
Yes, Tamanna, sure. Let's see. Of course, people buy past performance. That's very evident. You ask any fund manager, he says that मेरी last 1 month की performance अच्छी है, then I'll get more money. That's for sure. Tamanna, you hit the nail on the head. India buys past performance. There's no two ways about it. The point I'm trying to get to is there is 93% chance. I am speaking about rolling return on NSE small cap 250. There is 93% chance that it would be positive return on a 5-year rolling. Forget 10-year rolling. 10-year rolling is 99.3% positive return. Of course, now Naren sir is saying we are in that 0.7% possibility. Could just be, but I personally think investing is about higher probabilities, not lower probabilities. There is 89% chance for a 5-year rolling, and I'm speaking about monthly rolling for eternity, practically the full life of the index. 89% probability that you have beaten 5% per annum return. There is 81% chance that you made 10% per annum return and more. So the point I'm trying to get to is the odds are still stacked up in the favor of investor, even if he buys now. Second, I completely disagree to call them small caps as one group. MSCI index, India small cap index has 465 stocks. Indian mutual fund guys have only 250 stocks in the small cap index. So a foreigner sitting somewhere has 212 more stocks in the small cap index than the Indian guy. So why are we not expanding our universe of small cap? And how can we actually categorize 250 stocks in different industries, different segments, different sizes into one English word? So that's where I think the fund manager comes into picture. He's not buying 250 stocks.
Investors right now are wondering, should they reallocate to large cap funds? Should they reallocate out of small and mid cap funds? If they are mutual fund investors, direct equity investors are wondering whether they should reallocate their portfolios. What is your thought? Are you reallocating towards large cap?
See, that's our job in any case, and we have one flexi cap fund and one small cap fund. The point is that we are very much bottom up and we don't really do a top down call on whether to put money in large cap, mid cap or small cap. We just pick the best stocks available on the GARV framework that we have and terminal value investing framework that we have at that point in time. So if we find 50 stocks, out of which say 30% are in the small cap, we are fine with that. If you don't find 30% small caps, if it's only 15% small cap, we are fine with that too, right? So ours is a very bottom-up driven approach. But coming back to your point on allocation, the fact that you are talking about investors means that they have already planned something out for their portfolio, assuming that they have either their own call in place or the advisor's call in place. And the point of asset allocation is exactly that, to ride out the volatility. You cannot let volatility dictate your asset allocation. Your asset allocation has to start from the ground up, from a zero-based budgeting, as you would call it, depending on your life cycle, life stage, your social ambitions, your personal ambitions, and the goals that you have, which you would have planned out before investing. If you are going to chase the latest fancy fad or the latest asset class which is doing well, you cannot change it.
I will just differentiate. I get your point completely. Yeah. But in this case, why are we talking about this? This is not about the latest fad or asset class. I could say 2024 was thematic funds was the fad or the asset class. Or not the asset class, but
I'm saying why are we debating? Why are we debating?
Because you have
no,
a very
I'm asking
seasoned
you.
guy.
I'm asking you. Why are we even debating a change in asset allocation just because small caps have turned volatile? That's the nature of the beast. As Ashish said, it's not a bug; it's a feature.
Yeah, but they have they turned volatile because it is nature of the beast, or is there some inherent concern which has caused someone whose opinion is very, very valued to come and say this? I would say that's the only distinction.
Absolutely. So, see, people are entitled to their views. There is no harm in giving your views because, you know, we are professionals and that's how the market works, right? Somebody is positive, somebody is negative, right? The point is that stocks are cyclical in nature. Small caps even more so. That's why we always say that small caps are more volatile, and that's the nature of the beast. You can't help it. Let's face it, there has been some earnings cut in the last 3 or 4 months in the small cap indices. Markets have reacted. The earnings cut has been about 10%. Small cap index is down 70%, 17%. Point is, let's debate why those earnings cut happened. Let's debate those fundamentals. Why is the market down 70%, 17%? Why is the small cap index down 17%? And why have the earnings cut happened? If we dwell into it, then we can take a view on the future, whether this is recurring, whether this is likely to stay low, or is there a case for upgrade of earnings going forward? That's the debate we should be having, frankly speaking.
No, fair enough. Just one last point, Feroz, very quickly. Astute investors often say when the markets are hitting their bottoms is the time to come and buy. Is that time right now? Completely contrarian view. You have one view saying, you know, lock, stock and barrel, get out. My question to you is, would you say it's time to come in right now? Even if you don't have 20 years to wait, let me put that caveat in place. Say 20, 30, 40 years, I don't think people have that kind of patience.
Yeah, I would say definitely buy and buy. Okay, it might sound like an equity guy being biased towards equity. I look at about 4 short-term barometers. All of them say that the markets are light. Markets can correct 10%. That's my disclaimer. I wouldn't be surprised if a small cap investor from here on, you can mark my words, in 5 years at least get a compounded return of 12 to 15%. And waiting for 10 years to come into positive zone is something I would not buy if I buy a smart fund manager in my portfolio, model portfolio, which is what all our investors invest in, thousands of crores. Invesco small cap is there. That's beaten Nifty by 6% for this financial year as of yesterday. So I personally think buy and buy.
Buy and buy. Okay. I'm glad we have this on record. We'll come back and we'll talk about it. We have this. Okay, Ashish, buy and buy.
Yeah, I mean, I would like, see, I already said it before you asked that I think that it's a time to start investing, start nibbling, you know, and our trouble started with the US dollar and the Trump trade, right? What you're seeing now is just last couple of days, there is this, you know, noise which has spread. I respect that, but I think that next 3 to 6 months, if you just stagger your entry, you will get some, you know, good entry point. And I think I completely agree with what Feroz mentioned. And I'm not even a vested party because I don't run a small cap fund, but that's genuinely my view.
Last point. 3-word answer. Buy. No.
See, the small cap index earnings growth is 15 to 20%.
Yeah.
The large cap index growth is about 10%.
Yeah.
So you are seeing better earnings in small caps and valuations have corrected. So it makes sense to buy.
Okay, so buy. Buy is the verdict from all 3 on our panel today. Of course, the caveat, you make your own decision, you speak to your own advisor, you do your own homework on this. But we wanted to break down this sort of alarming message which has gone out and put it into context for you. That's all the time we have on this episode of The Big Question. But thank you so much to all of you for joining us. Thank you to our viewers. And we'll see you back again, same time, same place tomorrow.
Regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Government is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
पहले से हैं तो जो ट्रांजिशन
Hello and welcome to this Tuesday edition of the World Report. I'm Arjun Samar Mahindra and let's take a look at what's making headlines around the world. Shortly from now, Prime Minister Narendra Modi will co-chair an action summit on AI with French President Emmanuel Macron and hold bilateral talks to strengthen the strategic partnership between the two nations. PM Modi is in France for a two-day visit. Earlier, he was welcomed with a hug by French President Emmanuel Macron at a welcome dinner. Now, at this dinner, the Prime Minister also met US Vice President J.D. Vance, who was also in France to attend the AI summit. Meanwhile, NDTV's Gauri Dwivedi interviewed the AI envoy Martin Tisney ahead of PM Modi's crucial France visit. Take a look.
To talk more about the AI summit, to talk more about the role that India could play in this and why India could be central to a global AI revolution, let's now get in Martin Tisney, who's one of the envoys of the AI summit that is set to kickstart in Paris. Mr. Tisney, thanks so much for speaking to NDTV. One of the biggest things that the forum is really trying to do, the summit is really trying to do, is create a global framework for AI to ensure that no country has undue advantage over the others. Let me start by asking you, sir, how crucial do you think this global framework will be for the future of artificial intelligence?
Thank you very much for having me and for asking the question. So I think three things. First of all, it's the first time that we have such a diverse set of stakeholders in the room, and that's hugely exciting. So at the table, we not only have governments, we also have corporates in the private sector from around the world, and we also have civil society from around the world. So I think that it's this multi-stakeholder approach which is critical to the success of the summit. The second one is that the summit not only focuses on the potential harms from artificial intelligence, which was the focus of the first summit in the United Kingdom, it also focuses on the opportunities. So it's really looking at the two sides of the coin here. And I firmly believe that in order to unleash the potential of AI, we need to look at both. We need to look at how we unlock opportunities and at the same time, how we minimize harms. And the third piece is that the summit is based on concrete deliverables, actions. It's the AI Action Summit, and we will be announcing those on Tuesday after the closing session.
Indeed. Indeed. As far as the co-chair of the AI Summit is concerned, India is set to play a very important role. How do you envisage India's role in terms of ensuring that this framework the AI framework is accessible to all and not just to the rich countries who've made early strides?
I think the role that India plays is critical. We very much welcome India's role in the summit and our deep working relationship. And obviously, India plays a key role in the ecosystem, and it's a pleasure to be working with them.
Okay. Okay, we'll come to the India role probably as the summit goes along. But then let me ask you, in terms of the trajectory of AI, where do you see it? Do you see it closer to the profit-led, private sector-enabled model that US is championing? Or do you see that the China model, which is state-controlled and government-led, really having a major role in terms of what will be the future of AI?
So I think the first thing is the future of AI is open. It's not private or public. I firmly believe that it's both. To do this, we need three things. We need to share data. I think that the bottleneck in artificial intelligence increasingly will become data as much as compute, if not more. And when it comes to sharing, accessing data, the state plays a very important role. So that's the first piece. The second one is, in this point of the future being open, I think the open source AI ecosystem is critical. That is an ecosystem that needs support in order to be resilient. And that is an area where both the public and the private spheres play critical roles. And the third one is the participation of citizens. I think that is really important. I'll give you a concrete example when it comes to AI in healthcare and sharing sensitive health data. We need to be working with patient data organizations, for example. And again, that's at the intersection of the public and the private sphere. So I think that it's a combination of both. In order to bend the arc of AI towards the public interest, we need the private sector and the public sector on board. I think in the same vein, as I was saying earlier, our focus here is both on unlocking opportunities and minimizing harms, and our focus is really deeply on working with the public and the private.
US President Donald Trump says all hell is going to break out if Hamas doesn't release hostages by Saturday at noon, warning the ceasefire deal with Israel will be cancelled. Now, this after Hamas announced earlier on Monday that it will suspend the release of 3 Israeli hostages planned for Saturday due to quote-unquote Israeli violations. A spokesman for the armed wing of Hamas says the group is postponing, in fact, the next scheduled release of Israeli hostages, blaming what he says are Israeli violations of the ceasefire deal, which is also in place. 3 hostages held in Gaza are due to be freed on Saturday in exchange for more Palestinian prisoners held in Israel. Meanwhile, Israel's Defense Minister Israel Katz called the Hamas announcement a complete violation of the ceasefire agreement.
Well, I would say this, and I'm going to let that because that's Israel's decision, but as far as I'm concerned, if all of the hostages aren't returned by Saturday at 12 o'clock, I think it's an appropriate time. I would say cancel it and all bets are off and let hell break out. I'd say they ought to be returned by 12 o'clock on Saturday, and if they're not returned, all of them, not in drips and drabs, not 2 and 1 and 3 and 4 and 2. Saturday at 12 o'clock, and after that, I would say all hell is going to break out.
Talking about his controversial Gaza takeover plan, US President Donald Trump has said that Palestinians will not have the right to return to Gaza, doubling down, in fact, on his plan. He said that the US is committed to buying Gaza. On the other hand, Arabian countries have rejected the plan. US President Donald Trump is removing the exceptions and exemptions, in fact, from his 2018 tariffs on steel, meaning that all steel imports will be taxed at a minimum of 25%.
Trump has also hiked his 2018 aluminium tariffs to 25% from 10%. We are being pummeled by both friend and foe alike, Trump said. It's time for our great industries to come back to America. Now, the moves are part of an aggressive push by Trump to, in fact, reset global trade, with Trump saying the tax hikes on the people and companies buying foreign-made products will ultimately strengthen domestic manufacturing. Outside economic analysis suggest that the tariffs would, in fact, increase costs for the factories that use steel and aluminium, possibly leaving U.S. manufacturers worse off.
So essentially, we're putting on a 25% tariff without exception on all aluminum and all steel. And it's going to mean a lot of businesses are going to be opening in the United States. Now, we're going to be meeting over the next 4-week period, maybe on a weekly basis, and maybe we'll do a couple of them at different times and maybe together. But we'll be talking about other subjects like cars. We'll be talking about drugs and pharmaceuticals. We'll be discussing chips.
Meanwhile, a third judge has in fact blocked US President Donald Trump's order ending birthright citizenship for kids of people in US illegally. Now, the order has garnered a lot of criticism ever since it was signed by Donald Trump. Over at Capitol Hill, the US Senate voted on Monday to advance the nomination of former Representative Tulsi Gabbard to be the Director of the National Intelligence. US President Donald Trump said he does not view Republican Vice President J.D. Vance as his successor for the Republican nomination in the 2028 presidential race. No, but he is very capable, Trump told Fox News anchor Brett Baier during an interview that aired ahead of Sunday's Super Bowl. I think you'll have a lot of very capable people. So far, I think he's doing a fantastic job. It's too early, we're just starting, said Trump. Listen in.
You view Vice President J.D. Vance as your successor, the Republican nominee in 2028?
No, but he's very capable. I mean, I don't think that I think you have a lot of very capable people. So far, I think he's doing a fantastic job. It's too early. We're just starting.
Donald Trump will meet Jordan's King Abdullah on Tuesday for what is likely to be a tense encounter following the U.S. president's Gaza redevelopment idea and his threat to cut aid to the U.S.-allied Arab country if it refuses, that is, to resettle Palestinians. Now, Trump's proposal floated 1 week ago for the U.S. to take over Gaza, move its hell-shocked residents, and transform the war-ravaged territory into the Riviera of the Middle East, drew a negative response from the Arab world. Mob attack at book fair for displaying Taslima Nasreen's book in Bangladesh. A tense situation has arisen at the Bangla Academy's Amar Ekushe book fair for displaying Taslima Nasreen's books. A group of agitated people besieged a stall at the Amar Ekushe book fair this evening over the display of a book written by Taslima Nasreen, who's in exile in neighboring India. A group of U.S. Congress leaders have written to U.S. Attorney General Pam Bondi demanding an inquiry on the decision by the Biden administration to probe the Adani group. The leaders have slammed the Biden DOJ probe into the group and called it a selective, reckless, and a baseless pursuit, which can potentially be damaging to the India-US strategic ties. Now, the group of leaders, in a letter written to Pam Bondi, have said that there was no compelling reason for the probe to be initiated in the first place other than some external factors. Reminiscent of US President Donald Trump's tough immigration crackdown, the UK's Labour government has launched mass raids on illegal workers in the country. Described as a UK-wide blitz, the crackdown has extended to Indian restaurants, nail bars, convenience stores, and even car washes, which employ migrant workers. With British Home Secretary Yet Cooper personally overseeing the drive, the Home Office reported a record-breaking January as they descended on 828 premises, a 48% rise compared to the previous January, with arrests surging to 609 and marking a 73%, that's right, a 73% increase from the previous years. Listen in.
rules really need to be respected and enforced for the asylum and immigration system to work. That's why since the election, we have been increasing returns, so 19,000 people who have no right to be in the UK have now been returned, and also increasing the illegal working raids and going after the employers who are exploiting migrant workers. This is about making sure that there's proper fairness, proper enforcement in the system, and proper respect for the rules as well.
The prosecutor says Salman Rushdie was so stunned when a masked man started to stab him on a stage in Western New York that the claimed author, in fact, didn't even try to fight back. Rushdie is expected to testify during the trial of Hadi Mtar, who was charged with attempted murder and assault in the August 2022 attack. During his opening statement on Monday, District Attorney Jason Schmidt described the swift and sudden attack by Mtar, who stabbed Rushdie in the head, throat, abdomen, thigh and hand areas. Now, the author was left blind in one eye. During Schmidt's statement, Mtar looked on from the defense table, occasionally taking notes. His attorney, Lynn Schaffer, told jurors that prosecutors won't be able to prove Mtar's guilt, even with videos and photos. She acknowledged that nearly all the jurors admitted during jury selection that they had heard something about the case.
Today, the jurors heard opening statements from both the prosecution and Mr. Mtar's attorney. The prosecution started with a very graphic, detailed description of the attack on Mr. Rushdie. He described for jurors how an attacker kind of came out of nowhere from the audience, bounded onto the stage, attacked Mr. Rushdie at a full run and began stabbing him before anyone even really knew what was happening.
According to a lawsuit filed on Monday, a woman in the US has accused internet personalities Tristan and Andrew Trait of conspiring to coerce her into sex work, luring her to Romania and defaming her after her testimony to Romanian authorities. The civil complaint in Florida was reported earlier by the NYT, which said it marked the first suit against the brothers to be filed in the United States. Canada's Toronto Dominion Bank has said it would offload its 10.1% stake, in fact, in U.S. financial services firm Charles Schwab, as part of a strategic review undertaken following a landmark U.S. fine. Now, TD holds 184.7 million shares in Charles Schwab, worth roughly $15.4 billion based on Friday's last close. The company said in separate statements early Tuesday that TD's unit will sell 165.4 million shares of Schwab at $79.25 apiece for about $13.1 billion. Meanwhile, BP's fourth quarter profit fell to $1.17 billion on Tuesday, marking the lowest earnings for the oil major in 4 years. Now, this as weak margins dented its refining business. The 61% drop in quarterly profit from last year, coming just days after reports of activist investor Elliott Investment Management building a stake in the company, has heightened investor hopes for broad changes and strategic shifts, in fact, to boost returns, putting additional pressure on CEO Murray. According to reports, OpenAI CEO Sam Altman has told staff in a meeting that the company's board of directors intends to make clear it has no interest in Elon Musk's supposed bid. A consortium of investors led by Elon Musk offered $97.4 billion to take over OpenAI, the maker of ChatGPT. Now, in response to the bid, Altman posted on Musk's social media platform X, "No thank you, but we will buy Twitter for $9.74 billion if you want." Now, the billionaire's attorney, Mark Toberoff, has confirmed he submitted the bid for AI assets, for all assets, in fact, of the tech company to its board on Monday. The offer is the latest twist in a long-standing battle, in fact, between Musk, the world's richest man, and the right hand to US President Donald Trump, and OpenAI chief executive Sam Altman over the future of the startup at the center of the AI boom. According to reports, Chinese battery giant CATL plans to file a Hong Kong listing application this week to raise at least $5 billion. Now, the filing could come on Tuesday or Wednesday, added the sources, who could not be identified, discussing confidential information, in fact. A listing of the Shenzhen-listed firm, the largest battery maker in the world, in fact, would be one of the biggest listings in Hong Kong in the past 3 years. In the sports first, ace Indian pacer Jasprit Bumrah's availability for the upcoming Champions Trophy 2025 is likely to be decided on Tuesday, which also happens to be the deadline for the submission of the final squads to the ICC. Bumrah, India's best performer in the 2024-25 Border Gavaskar Trophy, has been sidelined due to an injury since the final test of the series. The star fast bowler had to pull out mid-match, in fact, after he felt pain in his back while bowling in Sydney in the first week of January. Since then, he has not played any cricket match. Golfing legend Tiger Woods abruptly withdrew from the Genesis Invitational at Torrey Pines, saying he was still processing the death of his mother. Calcutta Woods died unexpectedly last Tuesday at the age of 80. I plan to tee it up this week, but I am not ready, Woods posted on social media. I did my best to prepare, knowing it's what my mom would have wanted, but I am still processing her loss. Now, Woods, the tournament host of the Genesis Invitational, however, said he hoped to be back at the Torrey Pines later in the week, adding that he appreciates the continued kindness since his mom's passing. World champion D. Gukesh Dommaraju bowed out of freestyle Grand Slam chess after losing his second straight quarterfinal game against Fabiano Caruana of the United States on Monday. Having lost the first game with white pieces, Gukesh did not last long against the American Grandmaster in a must-win tie, in fact, with Caruana finishing the contest in a mere 18 moves. Gukesh will now fight for the last 4 spots. The freestyle chess is built around 960 random positions, shifting the initial position of the pieces from the base rank while the pawns remain intact. A tour manager for rapper A$AP Rocky testified that the hip-hop star began carrying a prop gun that only shoots blanks after a stalker and others had broken into his house. Lou Levine said Monday that Rocky gave him the gun after firing it in a confrontation with a former friend in 2021. The rapper is charged with 2 felony counts of assault with a semi-automatic firearm over the incident. The defense insists he is not guilty because the gun did not, in fact, even fire real shots. Philadelphia quarterback Jalen Hurts visited Disney World on Monday, a day following the Eagles' victory in the Super Bowl. Hurts were named MVP after going 17 for 22 for 221 yards and 2 touchdowns, and in fact also running for 72 yards and a touchdown in a 40-22 win over Patrick Mahomes and the Chiefs that avenged a Super Bowl loss 2 years ago against Kansas City. Listen in.
E-A-G-L-E-S, Eagles! It's a hell of a crowd out here. I just want to say thank y'all for the support. Thank you for the support. Being here is such a blessing. You dream about coming here as a kid and to be in paradise. To be in paradise with you great fans, all the great support. Eagles everywhere, across the world. Thank you for the support, and we brought it home to Philly. One more time. E-A-G-L-E-S, Eagles! Go Birds. I forgot the song. Head up high. Fly, Eagles, fly, on the road to victory. It's been a minute since I sung that, Mickey. You know that? Yeah. Been a little minute. Last time I sung it too soon.
On Monday's Tory Burch fashion show in New York drew stars from across the globe. American actor Amanda Seyfried and American recording artist Kiara were there. Sinji Lee, a Malaysian actor, also attended. Lu Yijiao of China also sat in the front row. Meanwhile, Indian-Australian actor Shibani Dandekar was also invited. The event also drew French model Mara Lafontaine and Danish influencer Emil Sindler. Now, Birch's runway presentation showcased a 2025 ready-to-wear collection. Well, that's all we have for you today. Take care and have a wonderful day.
Entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay.
Hello and welcome. Good evening. This is Ask Profit only on NDTV Profit, and I'm your host Malika Mishra.
And I'm Kamakshi Bahugna, and together we'll be taking up all your stock-related queries. So you can WhatsApp us or call us directly. Both the numbers are flashing on your screens right now, viewers. And on the show, we are joined by Mahesh M. Ojha of Sensex Securities on the fundamentals, and Kushal Gandhi, technical analyst, Stocksbox on the technicals. Welcome to the show, gentlemen.
Good evening.
Good evening. Now, let's get straight to the query. First query we have from Dinesh. He has written to us from Rameswaram. He writes to us saying that he's been tracking Sun Pharma Advanced Research stock because of the parent company, has a very strong hold in the pharma sector. So will you bet on the stock at the current level, considering it might outperform in the future if they made significant breakthrough in research? So, and he's also mentioned a specific note saying that he's bullish on Dr. Reddy and Nalco Pharma. So currently the stock is trading at 149 levels, and it was down significantly over 4%. Today the stocks have seen a lot of beating. So coming straight to you, Mahesh, on the fundamentals, how is this particular company looking like?
No, I think Sun Pharma stock is good, but I think all the mid-cap stocks are facing some more pressure due to uncertainty in market. So I think some more downside can't be denied. From here also we can see some more downside till 135 to 140 range. So stock is from 1 year horizon, stock is good. I think stock has a potential to go upside up to 25 to 30% in 1 year horizon and more than that. But currently market facing some selling pressure, so this stock can face more selling pressure in from here also. 135 to 140 level could become, but from 1 year horizon, definitely hold.
Okay, got it. And now we have another WhatsApp query written to us from Hari Om from Haryana. Now, Hari Om holds 252 shares of Vedanta at 462 a piece, and he's asking whether he should hold on to these many shares of Vedanta or sell them. Now, although he is sitting on a profit of close to 78,000 rupees, the entire metal basket of the Nifty has seen a lot of beating recently because of Trump tariffs, Trump announcing 25% tariffs on steel and aluminum imports. Now, while we don't know what kind of an impact Indian exports could see because of this Trump's decision, a lot of stocks have started reacting to this in the metal space. As a result, even Vedanta and other counters in the metal space were down. So I would like to ask this question to you, Mahesh. What do you think about the company, this investment, and when do you think Hari could make a lot more profits than he is sitting on?
Actually, stock is good, but currently global uncertainties are there and many more things which are giving some more downside pressure on the stocks. I think he should book at least 50% here and wait for the wait for the upside level. If his horizon is more than 1 year, then we can see 500 plus odd level in Vedanta. But currently, all the market are facing some selling pressure. Global uncertainties are there. So partial profit booking are available here.
All right, so that's the view coming in. With that, we have our first caller on the show. Ravi is calling us from Bengaluru. Hi, Ravi. Good evening. How can we help you?
Yeah, good evening. Good evening.
Yes, please go ahead with your
query.
query.
I hold 100 shares of Yathartha Hospitals.
Okay.
At the rate of 562.
Right. 562.
Is it right time to... Yeah.
Okay.
Is it the right time to add another 200 shares?
Another 100 shares?
Yeah,
And
yeah,
are you
200
looking-
shares I want to add.
Okay,
Yeah.
okay. And are you looking for a short-term perspective or a long-term?
No, I am looking for 1 year.
1 year outlook. Okay. So Mahesh,
Yes.
coming straight to you on this, is it advisable for Ravi to, add more 200 stocks in Yatharth Hospital and Trauma Care Services?
I think in Yatharth, he can add. Currently, stock is facing some pressure due to some their income tax and other issues. So, but fundamentally, stock is good. I think hospitality sector can do very well in upcoming day. If you want to add, I think they can add in these level, and for the 380 to 400 range could be a good level for accumulation in Yatharth Hospital. So, from 1 year perspective, he can add further in Yatharth. 600 plus level can come in 1 year horizon definitely. So we are optimistic for upside in Yatharth. So I think they can add Yatharth in these levels.
Understood. And viewers, don't miss your chance to get all your stock-related queries answered. So pick up your phones and call us right away. Let's slip into our next WhatsApp query. Suma has written to us, I don't know the location, but she holds 125 shares of REC at 561. Now, the price is currently trading around, the stock is currently trading around 410. She's asking if she should average it, exit or hold. Kushal, let's take this question to you. What is your take on REC?
Well, my sense is to, just let go of the stock because the stock remains in, significant distribution mode. It's constantly losing its relative strength as compared to general market. And, despite distribution, the volatility remains significantly high, the relative 50-day volatility. So it's best to, book your losses, just in case you're holding in losses. Because the shorter term moving averages are likely to act as constant supply zone. So it's best to sell at the current market price, considering the current market environment.
All right. And Mahesh, I'd like to take your view also on the same. What do you have to say for the longer term?
I think they can, if anyone want to add in the REC, then they can add in the some 375 to 400 range. Then that range could be a good for accumulation